Mr. Summer?
Yes.
Madam Chair, you have, I believe.
Well, we were on mute, I think. Could you go back to the online message?
Yes. Mr. Tejas?
Present.
Okay.
Didn't hear the motion.
Right.
So, for the members who are joining us via Zoom, we're actually on agenda item 1B, approval of the agenda, with the change that we're going to take agenda items 3F and G and move them up to be after agenda item 3A. That's the motion.
Madam Chair, can you say that one more time? And also, can we all be listed on there as present? Because the audio just started up.
Yeah, we apologize for that. So you are listed as present.
This is
but
Kathy
now we're
Allen. Yeah.
agenda.
This is Kathy Allen.
Kathy
I'm
Allen
on,
is
but we couldn't
listed as
hear.
present,
Yeah.
And member Tejas is listed as present. Yeah.
Good.
Okay, so the motion is to take items 3F and G and move them up to occur after item 3A.
Mr. Tejas?
Yes.
Ms. Allen? Treasurer Montoya?
Yes, present.
Yes.
Madam Chair, I believe you have 9 votes in the affirmative.
We're going to go now to approval of our minutes from our August meeting.
So moved, Madam Chair. Second. Move approval. Thank you.
Commissioner Garcia Richards?
Yes.
Treasurer Montoya?
Yes.
Mr. Probst?
Yes.
Mr. Tejas?
Yes.
Ms. Allen?
Yes.
Mr. Bingaman?
Yes.
Mr. Jennings?
Yes.
Mr. Lavender?
Yes.
Mr. Messina? Mr. Summer?
Yes.
The motion passes 9-0.
All right, we'll turn it over at this time to hear Ms. Heigl.
Thank you, Madam Chair. And good morning, everybody. Let's take a look at the State Investment Officer's briefing, if you would, please. And we'll start with item A, opening comments. As we traditionally do, let's take a look at total distributions for the last 12 months, $1,629,088,000 rounded. The total land grant permanent fund contribution from the State Land Office in August, which is lagged 90 days, $172,482,234. Our net asset value as of Friday was $46,805,736,000. The price of New Mexico WTI as of September 22, $86.65 per barrel. Rig count for New Mexico. 1 year ago, 111. As of Friday, that number was 100. Natural gas prices, $6.75 per MCF a year ago. As of Friday, that number was $2.63. Let's now go down to council matters. You'll be reminded of this more than once today. It's important that everyone try to attend, or do attend, if you will, the October meeting, October 24, the council meeting. 9 o'clock here in the cabinet room, and the Investment Committee, October 17, 1:30 at the SIC office. Please do your best to attend at least the council meeting, and if possible, the investment committee meeting. Let's look at operations. We are currently either hiring or thinking about hiring several people. And I'm going to ask Vince if he would to comment on the investment-related sourcing we're doing. Vince?
Sure. So we're looking for 3 folks, and actually we've got a couple of pretty good leads so far. Of course, Starless successor, we've advertised, and I've gotten a few resumes in for that. But nothing real interesting yet, but we're very hopeful there. We're sourcing a investment strategist. We've got a little bit of a lead on that one, so I'm kind of excited. We're moving forward on that one. And then we're looking for an analyst in the real estate and real return area. That one's been tough. That one we've been looking for more than a year. But we've got all the feelers out we can, and we're still getting hits. So I'm very hopeful that by the end of the year we'll have 1 or 2, maybe all 3. That's sort of our goal.
Thank you, Vince. Let's move to the governance committee update. Either Kurt or Kathy, would one of you please provide that for us?
Kathy, you available? So I'll give that update. Yesterday we had a meeting with Gary Porpendahl, who the council's hired to find a successor to Steve. He has sourced, it looked like, 15 qualified candidates, many of whom were from New Mexico, were all qualified. Initially, in his initial review, we have set times for to have initial interviews with them, beginning October 18th and again on Tuesday, October 8th and October 10th, just to narrow down the candidates for this group to look at. Those would be first round virtual interviews. On October 4th and 3rd and 4th, he'll be mailing each committee member their recommendations as well. So you'll see those recommendations to each of the candidates that are being recommended. It was a good. He was very pleased with the results that he got. That there were qualified people, even quite a few from New Mexico, who were willing to apply for the position.
Kurt, would you comment on the committee's recommendation for an acting state investment officer, please?
Yes. But the committee recommends that there be 2 co-acting officers on behalf of the committee in Steve's absence after his retirement. We're recommending that Vince Smith, with respect to investments, be one of the co-managers or co-acting officers, and that Charles Woolman, for administrative purposes, be the other co-acting state investment officer. And that's how we would propose that we would go forward in the interim until Steve's successor is selected. And I move that they be approved
I'll second
for that purpose.
I'll happily second that.
Madam Chair,
Madam Treasurer.
just one question for Mr. Moise or for someone that's internal. Is there any type of internal controls that we mess up because we do that? Or is everything internally okay by being able to do that as co-chairs? For example, like on any type of the accounts for the checks and balances. Is there anything else we need to do if we do this?
Madam Chair, I'm not aware of any concerns along those lines. Anybody else from the staff want to comment? I think we'll be okay.
I only asked because we had lost our CFO, and so when my deputy treasurer became CFO, we needed to make a couple of changes so that there was that checks and balances. So thank you. Appreciate it.
Any further questions on that motion? moved by Member Lavender. Moved by Member Summer and seconded by Member Lavender. Could we take a roll call vote?
Commissioner Garcia-Richards.
Yes.
Treasurer Montoya.
Yes.
Secretary Brooks.
Yes.
Mr. Tejas.
Yes.
Ms. Allen. Mr. Bingham.
Yes.
Mr. Jennings.
Yes.
Mr. Lavender.
Yes.
Mr. Messina.
Yes.
Mr. Summer.
Yes.
Ms. Allen.
Yes.
Commissioner, the vote passes 10-0.
All right, great. Congratulations.
Wow. Thank you, Commissioner. A couple of congratulations this morning. Vince is going to receive the Public Fund Leadership Award at the 8th Annual Southwest Institutional Forum that will be held here in Santa Fe on October 12th. And Dawn Iglesias did receive the 2023 Rising Star Award on September 12th at the 6th Annual Allocators Choice Awards in New York City. So congratulations to both of you. Under the topic External Relations, and Charlie, if you would please report on IPOC, RHCA, and the other matters under that heading.
Yes, thank you. Madam Chair, so this kind of looks like October will be a client month. We start off with a presentation to the Investment Pensions Oversight Committee. They want to know more about how clients participate in this program, the rules around that, and whatnot. October 3rd, I will meet with our largest client, Retiree Healthcare Authority, to talk about their performance for fiscal year 23. October 12th, I'll do the same for the New Mexico School for the Blind. And then October 26th, I've been asked to speak to a group of county managers. There's going to be a couple dozen as part of their annual retreat. And they're curious how can they participate in the pools that we offer. We currently have 26 authorized clients. We have 24 county managers that we'll be talking to. So if they have long-term assets, this is an option for them, and we'll let them know that. So we could have some more clients coming our way. Madam Chair, that's my report.
Thanks, Charlie. You have one more topic under external relations.
Oh, we've got a question.
Yes.
Is that just open to county managers? Is it?
Counties and cities, we manage money for counties and cities and basically political subdivisions, and it's defined by statute and authorized by DFA through joint powers agreement.
Yeah, I didn't know, would it be okay if you had a city person?
It's their meeting, but I can certainly ask.
You wouldn't mind?
I will do that, sir.
On September 13th, we hosted the Sovereign Wealth Fund CEOs and CIOs in Santa Fe for the first time in person. As many of you know, for the last 12 years or so, we've convened quarterly calls with our Sovereign Wealth Fund colleagues around the country, and they never met each other. The conference was a success. Vince put together a very interesting program with speakers that were on topic for things that are of interest to all these people, and we could not have been happier with the way that went. So thanks to you, Vince. Thanks to the others that helped coordinate this. Let me offer just a few comments, if I may, regarding my upcoming departure on October 1. Our last and our only strategic plan covered the years 2014 to 2019. The council, I believe, would be well advised to engage in another strategic planning process. I hope you will do that. The last one was attended by everyone. Everyone attended, including the governor, the governor's chief of staff, all the council members, and all the committee members. It worked beautifully. Copies of that strategic plan are available. If anyone would like one, please let me know or let Charlie know. We'll be happy to send you that. I'm going to recommend that the following topics be considered, among others, and there are 5. Staffing flexibility, including peer competitive compensation. Secondly, budget flexibility, reducing or making more relevant and appropriate controls by others. Third, council and committees to oversee compensation and staffing. The Governance Committee on Compensation and Staffing, the Audit Committee on Budget. The fourth topic, one of the 2 items that were not addressed from the previous strategic plan, council restructure, and the other, consolidation of investment management functions. And the final topic, updating our Enabling Act. So as you know, this is my last week in my role stewarding the permanent funds. We are very fortunate to have an extremely dedicated and professional staff. I'm grateful to have been able to work with our management group, Vince, Charlie, Brent, and Evan. These are truly the finest, and I mean this, these are the finest leadership team I have ever had the good fortune to work with. They're truly the best. I'm also grateful for the support from you, our council, from previous councils, the legislature, the governor, and the many other SIC stakeholders. So it's been an honor to be able to serve, and I thank you for your trust and support. Madam Chair, that concludes my report.
And Mr. SIO, are you going to provide those recommendations as well to your successor, or how do you plan to, should you rely on us to communicate that to this person, or?
I would be pleased to do that.
All right, well, at this time, we will take questions from Mr. Moise, but we're going to save our well wishes to the end of the meeting so that he is forced to stay in his seat. Any questions? Hearing none, let's move on to agenda item 1C and hear from our CI.
Well, thanks, Madam Chair. I was sitting here considering just throwing these notes away. I'm not sure I can follow them. The briefing this month, and I'll be short, I know we've got a long agenda here for you, is a little more geopolitical than markets and things we normally talk about, because that's where the risks are starting to rise. And I think we all need to be cognizant of what's happening on that front, because it does affect the financial markets and our investments. So let me start with China. China's in trouble. Not just the short-term cyclical downswing here in the country, but there's some longer-term problems. So we talked about that in this room a little bit. I've talked about it with the legislature to a degree, because it's meaningful to the world economy and to the financial markets. But just some notes from China over the last month anyway. One of the longer term things is there's a decreasing need for large infrastructure in China, and that is a primary way that country has built its economy over the last 20 years. As you know, China is the second largest economy in the world, and it just made massive gains since 1980, since entering the world stage, made massive gains. A lot of that, or a good portion of that, has been the building of large infrastructure. I've been to China several times, and I've seen what they do. They will build whole cities, high-rise apartment buildings, shopping areas, manufacturing areas, just everything you could think that would be in a 100,000 or more population city, and then they move people in from the countryside to fill the place, and they have jobs in manufacturing waiting, they've got housing waiting, they've got places for shops to open, and this has really contributed a lot to their GDP over the last 20 years. Well, that's really falling off. The reports that we're getting for large infrastructure expenditures in China are really just dropping off of a cliff. It's really something that's contributing to that country. More closer to the economy is there's reports now that 20% of people under 25 years old are unemployed. If that happened here in the United States, it would be a crisis. And further, among that same group, under 25, there's a significant number that are, or even those older than 25, there's a significant number that are underemployed. So folks running around with advanced college degrees or advanced degrees, driving cabs because they can't find the jobs in that economy. It's really getting pretty rough over there. The source of that story was the Wall Street Journal. That's not just an economic issue, it's a social issue. The real estate sector is starting to crack in China. The real estate sector there is 2 to 3 times bigger as a portion of their whole economy than the real estate sector is here in the United States. So it's kind of scary as to what's happening in their real estate sector, given how large it is as a portion of their economy. The technology sector is receiving a lot of pressure internationally, particularly from the U.S., and that's a large sector in China. Trade is highly important to China, and in July, both imports and exports dropped by 25%. 25% from the previous run rate in China last July. That's depression era type numbers. Overlaying all that, we talked a good bit about the demographics. 40% of Chinese will be beyond retirement age by 2050, and that's not something that we just get to 2050 and it happens. That's something that's happening today and will continue to happen until 2050. 40% will be more than retirement age by then. They're the fastest aging population in the world. The U.S. government seems concerned. We've had 4 cabinet-level meetings with the Chinese officials in the past couple of months, and people are thinking that's going to lead up to a meeting with our president and their president over some of the problems that are happening in China. So keep your eye on the China stories. If you're just browsing the paper and you see a story about China, that's probably one you want to take a little closer look at. But keep yourself informed there because it's important that big things are happening there, and it does affect our markets and our investments. Let's move to Ukraine. The war in Ukraine is 18 months old now, maybe 19 this month, and it's escalating. There's been military purges on both Ukraine and Russia sides. There's the Ukrainian counteroffensive, as you know from reading the newspaper, that's underway, and there's conflicting stories about the results. So it depends on where you get your news as to how well that is going. Both sides seem to be settling in for a longer slog, and when that happens, the big guy wins. And the Russian population is 143 million compared to the Ukrainian population of 44 million. The Russian economy was 2.2 trillion prior to the start of the war versus 148 billion for the Ukrainian. So again, as you're scanning the newspaper, those are stories you might want to pay attention to just a little bit more closely because I think there's a coming impact of that. One of the impacts that personally I'm concerned about is Russia supplies a good bit of the fertilizer for crops in the world. Now, not to us. We get most of ours from Canada, a little bit from Brazil. Of course, we make a lot of our own. But for the eastern side of the eastern hemisphere of the world, Russia is very, very important in providing fertilizer for crops. Ukraine, in turn, is a grain exporter. In fact, Ukraine exports almost as much of the food that they make as we do. We export a quarter of what we make. We make 25% more than we need. your eye on the Ukrainian stories and Chinese stories if you want to kind of stay ahead of what markets might be doing, and to not be surprised by what might come about. Here in the U.S., we're in danger of another budget-driven government shutdown. In the past, that hasn't been bad, but it does mean downside for the markets every single time. Usually not terrible. We don't see bear markets out of it, but we do see declines in markets. So expect that if we do get a shutdown. And then there's another $24 billion in aid slated for Ukraine, which has become a little bit of a divisive topic. So we've been keeping our eye on that. So that's kind of the geopolitical look in the world now. There's plenty of other problems, but those are some of the big things that will front end things in the financial markets. So I would just encourage you to keep your eye open on all three of those things. Lastly, in the financial markets, all of these things are happening on top of significant financial pressures. We've still have an inverted yield curve. We still have shrinking into money supply. That's the basic money supply of the country. M2 hasn't shrunk like this since the Great Depression. Housing market is struggling right now with these big increases in interest rates. We're starting to see new orders in the economy slow down a little bit. Corporate profits have been flat since about quarter 4 of 2017. That's the Fed, the St. Louis Fed, is information. However, employment still tends to be pretty strong. So not a great picture in the financial markets right now, but certainly not hopeless. One of the things we do want to keep our eye on is the Fed has increased interest rates at a pace that they haven't done before, and those interest rate increases tend to work their way into the economy over a 12 to 18-month period. So if you take the average at 15 months before any interest rate increases fully incorporated into the economy, that would get us back to June of 2022. And the Fed funds rate in June of 2022 was 1.2%. We're at 5.25% today. So we've got more than 4 percentage points to still work its way fully into the economy. So our eyes are open certainly these days. We've got more pressure on the geopolitical side, while we still have the same financial risks that we've been talking about over the past several months. There is good news, and not all that's terrible news, but there is good news. According to Nicole, we have $7.66 billion in cash in our cash accounts throughout the portfolio. It's 15% of assets. Not there by allocation, particularly. It's that inflows have swamped our ability to get the cash to work, particularly in the private side of the portfolio. Now, we can shove it in the public markets. We can raise our weights in public traded equities. We have been raising our weights in fixed income. But with the financial outlook that we just discussed, I'm a little bit concerned about doing that, and less afraid of holding cash, particularly because we're earning a little more than 5% on the cash that's sitting in the bank. So relative to the risks that we just discussed, we are in a very good position. If markets were to react to some of the tougher things that are happening out there, we've got cash in the bank to take advantage of lower prices, and that indeed is the plan if that were to occur. And we just don't see markets getting away from us to the upside, given some of these risks that everybody sees. There's nothing that we said here that nobody else doesn't already. So, Madam Chair, that's my report on kind of what's happening out in the world. Again, I think we're still very well positioned for what's happening out there. Maybe I'll pause to take some questions here, and then I just have one other comment.
Where are we for the state? Are we in a pretty good position for natural gas? I mean, natural gas, to me, I keep hearing or thinking that maybe I picked it up somewhere, Poland or somewhere, that there's a huge shortage of natural gas on the East Coast, that they cannot get enough natural gas to heat the East Coast. I mean, I don't think the pipelines are there, and they can't truck them, but they don't go by ship. So
yeah, Madam Chair, and I'm not up on the particulars. I don't know, Don, do you have a comment? She follows energy a little closer for us.
Our natural gas market seems to be operating just fine. We're not seeing anything stated that shows that New Mexico's natural gas markets are not operating well. We're producing even more. We're sending it out. There is a potential for pipeline capacity constraints that we're seeing now. It's not as bad as it was back in 2018 and 2019 when there was such a pipeline capacity constraint that we started seeing our differentials to Henry Hub just skyrocket. We were getting pennies for our natural gas. Right now, we're still holding firm with Henry Hub, so the pipeline issues haven't hit us the same way they hit Baja. And our exports seem to be doing just fine. What is the issues that you're discussing? I actually haven't seen that. I'll look that up on the East Coast, but New Mexico's production has not been hit by that.
I mean, I don't know if we can get it out of here to sell it. It's probably that hot.
Not with the pipeline issue.
Going to the East Coast, they need the LNG.
I can also look at if you're interested, I can look at the pipelines and see if there's any additional build out.
Madam Chair, I just have one comment for Graham, so one question actually. Jamie Dimon said this morning that the rates are going to 7%. And he said, he's telling his customers in the base of that world to get ready. What do you think?
Well, he probably knows more than I do with respect to,
I doubt it.
He's got all those people on the ground. I'd like to say Fed funds rate was 1.2% in June of 2022. We got the rest of that still to come. I sure would like for him to hang in here and let us see what happens just with that. I wrote the annual investment plan that, for the Fed to raise interest rates that quickly, they set hundreds of PhDs. I don't know how many PhDs, economics PhDs they had down there, but they had to have already analyzed what will 500 basis points of Fed funds increase mean to the banking system, mean to the housing market. They had to have already analyzed this. Now, maybe they analyzed it and came up with an answer that's wrong. Devin, I don't know.
We'll get to see. That's the good news. We'll find out.
Well, one more comment, Madam Chair, and I'll get off the floor here.
Might not be good.
If anyone has any leads for us on those three positions that I discussed with you earlier, please pass them on. We'll take any advice from any quarter on the matter. I do want to come before you with when Brett comes with his budget, with the request for 4 new positions for the investment team. And I really feel like we should have these filled. We have a much better chance of the legislature if we had these filled. But I don't want to fill them with just the body. That's the reason we have to close the center open. We wait until we find the right person. But more volume might find that right person quicker for us. Thank you.
Anything further? Online folks? Okay. Move on to agenda item 2D and hear from RBK on our July report.
Thank you, Madam Chair, and Vince for the comment. Vince, any other comments before we get started?
No.
Okay, great. I think we start off on page 29 of the materials. Brett has it up, on the screen here. And this is our capital markets review, our one-pager for the July performance summary. This is intra-quarter month, so it's not going to have all your private marks and the full reporting, but does provide an update in terms of what happened through July. In terms of the market, you can see on the bottom right-hand side, we have the market performance, so those are the major indices and the trailing performance for each of those. You can see when you look at that MTD, that's month to date, so the July quarter to date and calendar year to date, it's been a very good year and very good month in July in particular for risk assets, publicly traded equities, especially on the back of continued reasonable economic data and softening inflationary pressures that we've been talking about, that folks are at least hopeful could result in a soft landing. As Vince described, there's a lot of macro and geopolitical risks that may come in the way of that, but so far, so good. Since then, markets have been less accommodative. August, September has certainly cooled off for a whole host of reasons, some of which Vince also discussed, and we'll bring you the August report at the next meeting to look at that in a little bit more detail. You can see up top, U.S. large cap, represented by the S&P 500, up over 3% in a single month. When you think about sort of our long-term expectations for equities, that's really in the high single digits. So you can see a single month representing 3% obviously is a standout month, and actually resulted in some of those stocks putting up some of the best returns that we've seen in quite some time, and ending up with some all-time high measures, which of course is great to see in the short term. I think this year has certainly exceeded most investors' expectations in terms of the returns we've seen out of the public markets in particular, but also presents, I think, an equally outsized risk for a correction or a reversal the other way. Small cap stocks outperformed in large part as regional banks, which have of course come under pressure, as we've talked about in the past, have started to rebound some. Non-U.S. also really earning their keep. From a valuation perspective, we've talked about how that fits relative to U.S. equities, and it's nice to see that area of the world doing their part in contributing to the overall return. That was in part aided by a softening dollar, and as we've talked about in the past, converting those foreign profits into dollars when the currency is a little bit weaker, is accretive to total return. Emerging markets also doing quite well, and out of the publicly traded markets have done the best. We won't spend too much time on the yield curve. That's on the top right-hand side. Vince covered it in terms of the fact that it's still inverted. That's always been a precursor to a recession. It's held out for quite some time, but we still have that inversion as, again, the Fed has pushed up the front end of the curve. We're well above 5% now. That has lowered the opportunity cost of holding more conservative assets, where in the past, really, we're getting a reduction in your purchasing power as inflation was mid-single digits, and you were essentially getting nothing on your cash, so it was quite expensive. This is a different environment that Vince is describing. Having the amount of money that you have in cash really is no longer the same issue as it once was, because you're earning 5% and inflation is closer to 3%, so you actually have a positive real yield on that. It's a very different story than even a year ago. Now, inflation has come down. At the beginning of the year, it was 6%, about half of that now with 3%, but still above the 2% long-term Fed target, although, again, as we've talked about, it may be more flexible around that number, but still, I think a desire to get back there. And the most recent meetings have been indicative of that. It wouldn't be out of question to expect additional quarter-point hikes going forward. So lots of things happening in the markets, both on a geopolitical and on an asset class level, but absolutely agree with Vince that in terms of your positioning, you're well diversified and have exposure to all the assets that we anticipate will do well in this kind of environment, and also have the dry powder to redeploy and take advantage of market dislocation as they present themselves. So I'll stop here in the interest of time. Marcia has a couple comments on the performance.
Sure, go ahead. I'm going to take you to page 31. Just a couple things I'd like to say at the beginning. Remember when we were talking about asset allocation, there were some asset allocations, but Vince talked, I should say, about it takes a while to get there. So this report reflects those interim targets that were also discussed, because it takes a while to get to the total target. So when you're looking at the allocation for land grant and severance, and throughout this report, the target allocation that is being shown is the target is the interim target, again, because it takes time to get to the full target allocation. That's reflected throughout this report. And we will tell you when you get to your target, and when we get close, you'll probably move away from the interim and go to your actual target. With that said, performance, as Matthias said, it was a strong month in July. You were up 1.41 for the month. That translated to a calendar year-to-date return of 6.66. And obviously, fiscal year is 1 month at 1.41. You'll notice some underperformance. Again, your portfolio, a lot of your portfolio has a defensive take to it, and you do, when there was a strong market and you did hold cash, although cash was performing quite well, you slightly underperformed. You can see the land grant was 13 basis points below its interim benchmark. I can just forward a couple things I'll say. As Matthias said, this is a interim quarter month. So we hold the return for real estate, private equity, and real return at zero, because those are valued on a quarterly basis. So this does not include those privates. And secondly, in August, it was not as good a month, so your active management paid off. So there is outperformance in the month of August. But again, here, seeing some underperformance just for the month. A couple other things I want to show you before I move on. I'm going to take you to page 37, Brent. And this is looking at the composite performance. Again, you'll see U.S. equity outperforming. We've changed the structure of that to be closer to the benchmark. Non-U.S. is mostly active. So in this month where things were going up, your active managers underperformed. That has switched in April, so they're outperforming again. But what I wanted to focus on here is Tom, your asset class director for fixed income, brought you a structure study, and that structure study changed the structure of your fixed income portfolio. So as of July 1st, we're reporting that as public markets fixed income and private markets fixed income. And the private markets fixed income benchmark changed as well to Credit Suisse leveraged loan plus 2. So under private markets, you're seeing 2 benchmarks. You're also seeing some underperformance there. But I want to go over the private market fixed income custom index. That is taking the non-core fixed income benchmark through June 30th and then using Credit Suisse leveraged loan plus 2 going forward. So that'll keep the history. But then we're also showing the dedicated benchmark going forward, which is that leveraged loan plus 2. So we're showing you both benchmarks there. Other than that, those are changes that became effective July 1, the interim target, the change to the structure of the core fixed income. In August, when we bring you the August flash, there'll even be more detail shown for the fixed income. Some sub-strategies will break out. So with that said, Madam Chair, a brief report, but just wanted to point out the differences in the July flash.
Which one was the allocation that we changed, like the definition of portfolio that you just mentioned with the
private market fixed income composite? We have a custom benchmark that has actually 3 benchmarks weighted, but that when the structure changed, the structure changed. We moved that, or Makita and Tom recommended moving that to the Credit Suisse leveraged loan plus 2, and I will say that we've moved many of our clients to the same. So we have both. Yeah. So we're showing your history. The top one is kind of the history of includes the non-core history, but your policy benchmark going forward is the bottom one, Credit Suisse.
Previously named core fixed income and non-core fixed income.
Yeah.
That's public insight.
Thank you.
I'm going to move on now to agenda item 3A and turn it over to our investment committee.
Thank you, Madam Chair.
Oh, sorry.
So I'm just saying, then Tom came and I just was talking.
In a positive way.
Thank you, Madam Chair. Hopefully be able to make clear very quickly why we asked these 2 real estate investments to move forward. For some time now, Vince has requested that we change our process, at least as it results to what we call re-ups. Re-ups are same manager, same strategy, no material change in leadership, satisfaction with the performance, and a clear picture that this is simply adding to an investment we've already made. And the idea there is that Kathy Allen, the chairwoman of the governance committee, will speak in a minute to this as well. We had a conversation over the weekend, and we're able to come to an agreement about how we would approach this with the council. And the idea would be that the asset class manager would review the material, and that at this particular point, this would be the first part, the information would come to the investment committee, and so long as all of the boxes were checked, then the staff investment, Vince and his team would have the opportunity to move forward at that point. And the council would be told, and that information would be reported to the council. So that's kind of the nutshell of the proposal. And what we thought we could try to do today is to give you a little bit of a taste of that by doing F and G and kind of show you how that might work. Actually, Member Allen had indicated, although she's on the phone, she'd indicated she would like to have an opportunity to talk to us on this as well.
Thank you, Harold. Thank you, Member Lavender. What we talked about is ways that we could really focus the responsibility of the council, full council, and save time in a way. So one of the things that we're looking at is, as a first phase, to look at these re-ups where there's no changes, the same management, same group, whether that can be just a consent as opposed to having to hear the full proposals from the investment advisors. Because we already go through, we have the staff's opinion, we have the consultant's opinion, and then we have the investment committee's opinion. So we're saying, let's look at the re-ups being something that we don't have to hear the full proposals on. That is based upon a caveat of several things that we talked about. One is we want to be sure we have a legal opinion that we can do that and we're still fulfilling our fiduciary responsibility as the council. A second is the role would be exceptions. Any exceptions would come to the council, or any divided votes or anything that, where there needs to be more discussion. It means that we need to have really qualified financial experts on the investment committee, and that they need to come to the committees, because this is probably the most important committee that we have on the council. So it needs to have the right people, and they need to be attending. And we're going to look, in light of both the role of the governance committee and also the change of senior management, really look at the charters and the roles of each of the committees and making at their optimal amount. So we believe the council's role, the full council, is on policy, on decisions, on any kind of exceptions, to understand any new investments, but that if this is a re-up of a company that we've already approved, that this is something that we could do with a consent appeal. So that's our thinking about it. And then one other thing I want to mention, all of us are required, everyone on the council, everyone that's part of the staff and the SIA must sign a code of conduct each year. And if you haven't signed that code of conduct, we need to know that. We need to get it to you to sign. And I believe we're going to look at this. We may recommend that if people won't or refuse to sign the code of conduct, maybe this is not the best council for them to be on. So those are the two things that I wanted to mention, and I'm happy to answer any questions on that.
So I'll start.
If not, then I would go back to you, Member Lavender. Mm-hmm.
So my question, is there going to be any limit on the re-ups, any monetary limit?
We haven't talked about that yet. There has been a suggestion that there be a dollar amount, maybe 100. Maybe you can tell with looking at today's agenda, Madam Chair, the size of the investments we're having to make. And Vince just told us there's $7.6 billion sitting there needing to be invested. Although 5% is not bad, but thank goodness it's not still 0.1. But anyway, the fact that we can do it that way, I would say that would be a council. Obviously, it's a council decision. We can talk about that. We didn't particularly talk about that at this given moment, other than the idea of 100 to 150 million on a re-up, adding to keeping the mandatory maximum percentage that can be invested in any investment, keeping that in mind. That obviously is open for some discussion too.
And then will members have an opportunity to ask questions? So you're proposing we don't have the full presentation.
Right.
But we do have the folks here, so.
To do. Yes, ma'am. And I think that one of the ideas would be that even if we were to move this to a consent agenda, for example, any member can simply request that any item on the consent agenda come before the council if they have particular questions about that particular investment.
Okay.
So that would be, so there would never be a time where the council was foreclosed from asking questions and delving as deeply into something as they wish.
Okay, and then this code of conduct, what is that? That's not the financial disclosure, that's something else.
Correct. The council has for years had a code of conduct, which is basic governance that the governance committee approved and sent to the council. The council voted to have basic fiduciary confirmation, non-self-dealing, disclosure of conflicts of interest, standard endowment / investment board type governance protection.
We don't recall whether or not we have that.
We do have it. It goes out, and there was some discussion about council. I'm not up to date as to whether there are gaps in signatures, but in any event, yes, we council instituted a code of conduct for themselves. It's not something staff imparted on the council.
Madam Chair, I mean, I do recall that a number of years ago there was some controversy around whether members of the council should have to actually sign the code of conduct. I can't recall exactly why, but the issue has come up in the past.
We may move the discussion of the code of conduct off. At this point, we can't have that to the agenda. But we may need further information on who has and has not signed it and what it looks like.
We'll get that.
So, all right. So let's.
I can keep going after.
Unless there are further questions on this proposal, and how are motions going to be?
Well, what I was going to ask is to get a sense of the council, and I would like to propose that, for example, at the next council meeting, any re-up that fits the parameters that I've discussed earlier, that be placed on a consent agenda for that meeting. And then we can kind of see how it goes. I mean, we have to make sure the council's comfortable with this, but the idea would be to see how it goes. I can move that, or I can simply, under a sense of the council, that we could do that, because that's something that we can change.
Any questions? Any objection to consent agenda for the next council meeting, Sylvia?
Madam Chair, next month's council meeting will be involved with the selection of the new state investment officer. It could be lengthy. Or please correct me if I'm wrong.
It could.
If there were any way to use a consent agenda for all investment items next month as a trial, that I think might be helpful to the council, and it would not extend the meeting into the evening hours.
All investment items?
Suggestion, but there's obviously not agreement on that, so it's not mine to decide.
Madam Chair, I think that my opinion would be that we would very comfortable doing the consent agenda items on that come before the investment committee. I think the council actually will need to have maybe this strategic planning session could be where we address some of these things, because how we handle all of the investments has always kind of been a question for even before you and several of the others on the council were on the council. But I think that my suggestion would be that we for sure do the consent agenda next time for the re-ups, and that we can ask that the asset class managers and the presenters truncate their presentations and become very succinct for the next meeting. That would be my suggestion.
Right.
Let's take member number, and then I'll go to the online folks who want to weigh in. Yeah.
Madam Chair, what I'd recommend is that the governance committee and the investment committee get together and make a proposal to the full committee for how to handle investments in general as a way to shortcut some of this review, because some of the review has become rather in-depth, and we're going to spend 160 minutes going through each one of these investments. It already having been reviewed by advisors, consultants, staff, the investment committee, with a recommendation for a vote, approval vote. So it's duplicative to have the presentation, in my view, of the actual investment advisors, unless there's a disagreement in the investment committee about whether to do the investment before this committee. And so to Member Allen's point, I think a great deal of time could be spent focused on policy rather than each individual investment. But that's my own view of this.
Yep. So Madam Chair,
Member Allen.
This is Kathy Allen again. I would recommend we not move so fast to say we do a consent agenda for next meeting. I think the first phase should be the re-ups, and then we can look at the next phase of what other investments or how we might truncate them. We had quite a bit of discussion about perhaps the need to have any investments in whatever are New Mexico related projects always before the council. So I think a good suggestion is bring it back to the governance committee. We'll discuss it. Maybe it becomes part of the strategic planning going forward, but to limit it next week, for the next meeting, to just be the re-ups and for the consent agenda. And we can talk to the presenters for investments to truncate that somewhat, their presentations.
Okay, so let's move ahead just on, let's now take out the suggestion for the entire investment portfolio, or the entire investment recommendation to be consent. Let's just move now to re-ups only. Do any members have further thoughts on re-ups to be a consent for next meeting?
Madam Chair, I would be in favor of that.
Yeah.
So with that, we will just do that trial for next meeting. For this meeting,
Madam Chair, what I was going to suggest is that the asset class Keith and Townsend can walk us through just a short review of the two real estate investments that we have. I know that that would give us an opportunity to kind of get a feel for how it can be truncated if it needs to be. And also would be an example of what will come to the investment committee prior to coming here.
so how does the motion work? Are we going to take them separately?
Yeah, take these separately, each one at a time, but at least that'll give them a chance to.
Okay, hearing nothing further on this, we're going to move now to agenda item 3F, and we'll ask Mr. Sable to join us. Is that what you want? No.
Okay. So that's, Madam Chair, the re-ups on the agenda, though, are 3E and 3G. So I would ask Matt Ahern to join me, please, up here for this portion.
And we're all screwed up.
Agenda item 3D, Copenhagen Infrastructure 5.
It's 3 Echo and Golf.
3 Echo.
I apologize.
So IPI.
IPI Partners 3.
Madam Chair,
Do you need a motion?
Madam Chair.
To move the agenda again?
Madam Chair, I move we modify the agenda to reflect that item 3E and 3G have been moved to items 1 and 2, or item A and B for under section 3 of the agenda.
I'll second that.
All right, so just for folks, the members that are listening online, we had incorrect letters before.
That was my fault.
So now we are on agenda items 3E and G. E as in Echo, G as in Golf, are moved to be taken now. So we actually have to re-vote on this. Are there questions? We just had the wrong letters before. So we're on agenda items 3E and G. Any questions? We have a motion and a second. Can we take a roll call vote, please?
Yes. Commissioner Garcia-Ritchie.
Yes.
Treasurer Montoya.
Yes.
Secretary Probst.
Yes.
Mr. Tejas.
Yes.
Ms. Allen.
Yes.
Mr. Bingaman.
Yes.
Mr. Jennings.
Yes.
Mr. Lavender,
Sheepishly, yes.
Mr. Messina,
Yes.
and Mr. Summers.
Yes.
If we could make a recommendation for the investment chair to get his eyeglasses checked.
I'll second that one as well. We don't need to roll call that one, I'm gonna just do it.
Thank you, Madam Chair. So I'll I guess make one comment at the outset. I think the plan for me to proceed is to run through a very brief outline of the investment. The updated and refreshed due diligence work by Townsend is in the board book and follows my staff memo that appears on page 137. And so we'll leave some room for Q&A for Seth and Rob as is appropriate. After I make my comments, I'll turn directly over to Matt to address the strategy. So jumping right in, we're looking for approval for a $100 million investment in IPI Partners 3 to be accompanied by a $50 million co-investment vehicle. We do own IPI already. We have a $75 million commitment to the second vintage in that series. The portfolio will continue the prior vintage's focus on acquiring and operating core plus value add and build-to-suit data centers with a target net IRR of approximately 12% at leverage on the order of 65% LTV. In terms of performance, the first vintage in the series generated top quartile performance with nearly a 26% IRR and a 2.0 multiple. Second vintage was dated 2020 and is too recent and back-end loaded because it's built-to-suit strategy to be able to report meaningful results. There have been no material manager changes in the strategy, remains the same as it has been previously. IPI, as you may recall, is a joint venture between Iron Point and Iconic, which is Mark Zuckerberg's family office. Iconic serves as an investment advisor to founders and executives of key technology success stories such as Meta, Microsoft, LinkedIn, Twitter, and Apple. This network of executives carries significant potential value add as a source of market intelligence and off-market deal sourcing for build-to-suit opportunities. Really briefly, what we like about IPI, extremely high-quality exposure to one of the most rapidly growing infrastructure segments in data centers through build-to-suit projects for some of the largest tenants in the marketplace. As I mentioned previously, the company has great pedigree and tremendous connections. And then finally, this fund vintage will have somewhat higher focus on international exposure, and we believe that adds a diversification benefit to our domestically focused data center exposures as it stands. I'll wrap up there and hand off to Matt. Welcome, Matt.
Great. Thank you. Thank you, Madam Chair. Thank you, council members, for having us here today. My name is Matt Ahern. I'm the managing partner and a founder of IPI. I'm joined by Alexa Singer, who is our head of capital solutions at IPI. We very much value the existing partnership we have and look forward to expanding that further with the commitment we're talking about today. By way of background, just a bit more detail, IPI was formed in 2016 with the goal of becoming the largest dedicated investor in the data center sector. As Mr. Sable mentioned, we were founded through a joint venture between Iconic Capital and Iron Point Partners. We really started with a mission to provide strategic capital for the sector to the likes of Amazon, Microsoft, Google, and others. We really started our approach by asking the question to those groups, what are the challenges you're having with your business today and the ability to scale it? And universally, the feedback we heard was looking for groups that understand technology, understand the challenges they're facing today, and are looking for partners to help support that. That partnership involves finding sites, operating data centers, as well as development, which we've grown significantly over the years. Given this feedback, we have scaled our platform to help solve these problems. We are now the largest pure-play data center strategy in the world. We've invested over $12 billion to date. We're currently raising our third fund, as we referenced, and we currently invest in North America, Europe, and developed markets in Asia. To successfully do this, we've built a dedicated team focused on this strategy. It's been purpose-built to focus on the global opportunity, which has resulted in nearly 60 professionals in offices, 4 in the United States, one in Europe, and one in Singapore as well. Switching a little bit to the opportunity in front of us, at the founding of IPI, we saw the enormous future growth that was going to come from technology companies, cloud computing, other advancements, and that was namely coming again from the groups of Amazon, Microsoft, and Google. Their businesses were rapidly growing. Just to give you a sense on that growth over the period of time, in 2016, Amazon's cloud business, which is called AWS, had about $12 billion revenue of business, a large business at the time. That has since grown to be about $80 billion in revenue in 2022. Scaling infrastructure was important to them then, and it's important now as we sit here, really at a generational moment for technology, driven by AI and other advancements that we all hear about in the press at a regular pace at this point. This has created a step function in growth in the industry for the need for infrastructure to support this growth, which AI on its own has created a step function of about 30% of the overall market on a go-forward basis. This is really occurring with a backdrop of challenging supply in the market from large-scale sites, large-scale power to support these businesses, and again, it resulted in these groups looking for partners like ourselves to help solve these problems. As a result, the current industry sits in a very strong position where we have vacancy rates in data centers in major markets in the U.S. sub 3%. Northern Virginia, which is the largest data center market in the world, it's sub 1% vacancy. That then has driven rental rates to increase year over year and resulted in attractive yield. This has created an even larger opportunity for IPI as we think about where we are today. It's comprised principally on a focus on pre-lease sites, long-term leases in major markets with investment-grade tenants, again, the likes of Amazon and Microsoft, which has now resulted in a very deep pipeline as we look to Fund 3 and as investing to date. With that, I'll pause, trying to be succinct, and happy to answer any questions or turn it over to the rest of the team.
I'm going to recuse myself from this matter.
Further?
Madam Chair, I'll try to make the right motion this time in the right place. But I do want to just let the council know that the presentation you just heard is a good example of what we would hear at the investment committee prior to making a recommendation to move this forward under this new idea that we have, the new process. So that's an example of what it is. See if I can get this right. Based on the recommendation of the Council Investment Committee, Consultant Townsend, SIC staff in general, fiduciary oversight of RBK, I move that the State Investment Council approve a commitment of up to $100 million to IPI Partners 3 LP and up to a $50 million into a co-investment vehicle subject and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Second. We have a motion and a second. Any discussion on the motion? Hearing none, let's take a roll call vote.
Commissioner Garcia Richard.
Yes.
Treasurer Montoya.
Yes.
Secretary Props.
Yes.
Mr. Tejas.
Yes.
Ms. Allen. Mr. Jennings.
Yes.
Mr. Lavender.
Yes.
Mr. Messina.
Yes.
Mr. Summer.
Yes.
Ms. Allen. Ms. Allen.
I don't believe she's on.
Okay. The motion passes 8-0.
Great. Thank you, Madam Chair. Thank you to the council.
So we just going to talk about.
All right. Thank you.
Thanks.
Thanks.
just as a reminder to folks listening in, we are now on agenda item 3G, KKR Real Estate Partners 4. And we'll turn it back over to Mr. Staples.
Great, thank you, Madam Chair. One point that I'd like to make here is if you look at the last recommendation here for IPI, it's basically 2x what the prior investment was. Growth in assets here at SIC generally has been very substantial, and so I would urge caution in terms of how we define what would qualify as a re-up agenda item versus a new item. We could, with a hard dollar cap, run into a case where things are being shunted back to the main agenda unintentionally. So my recommendation would be to put a multiple on the prior investment amount.
We'll keep that under advisement. I appreciate it.
Jumping into agenda item 3G, I'm joined by Justin Patner and Lawrence O from KKR. We're looking for a new commitment to KKR Real Estate Partners for in the amount of $100 million. We own prior exposures in the fund series in vintages 2 and 3 each of $75 million. By way of refresher, REPA 4 targets net returns in the 12 to 15% range. It's an opportunistically focused portfolio strategy that will continue the prior vintage focus on acquiring cash flowing transitional assets either individually or through scalable platforms. The team's investment sector focuses currently include rental housing across student, senior, and multifamily due to broad shortages in those areas in the industrial sector due to continuations and expected benefits deriving from onshoring trends and from increases in online shopping and the logistical requirements required to support that. And then finally, on an opportunistic basis, they'll look at cyclically stressed or distressed and opportunities in out-of-favor sectors that may include sectors such as retail, hotels, and office. Because of the transitional nature of the portfolio's assets, returns will tend to be back-end loaded and more weighted to capital appreciation than in income. In terms of prior fund series performance, fund series performed largely as expected, and each of the 2 prior vintages were either above median on either IRR or net multiple or both. The third vintage is only 65% invested and 8% realized, so the performance metrics on that vintage are not meaningful at this point. With those comments, I would remind everyone that Townsend's due diligence is in the diligent board book and will follow my staff memo, which appears on page 234. KKR's presentation is on 272 of your board books. And with that, I'll hand off to Justin.
Keith, thank you. And Madam Chair, council members, it's great to be here. It's actually great to be here in person. Last time we did this, it was over Zoom. And we missed being in this great building. My name is Justin Patner. I'm a founding member of the real estate business at KKR. I now run our U.S. real estate private equity business. And I'm joined by my colleague, Lawrence O., who's in charge of West Coast equity distribution. As it relates to REPA, this is our flagship real estate strategy. We started it about 12 years ago, and to date, we've generated about a 19% gross return. Importantly, when we talk about returns, I think it's really critical to look at what's been realized and not realized. In our 2 prior funds, we've realized a significant amount of returns. We've invested about $6 billion of capital, returned about $4.2 billion. So our first fund has a realized IRR of 15, and our second fund, where we're partners together, has a realized IRR of 21. REPA, however, sits within a much broader real estate business. Today, we manage about $64 billion of assets, and our real estate business naturally sits in a much larger firm that oversees about $500 billion of assets. And I'd say there are a few things that we did when we started the business to differentiate. One was we knew that it would be important to have a real estate business that both was a lender as well as an investor. We also thought it would be important to have a global footprint. Understanding global capital flows, Vince touched on this before, critical, and then also really understanding how borrowers are behaving in addition to investors, we thought would be very important in terms of overall performance. The other thing that's critical, I think that KKR offers, is we run a collaborative firm. So we have a corporate private equity business, an infrastructure business, credit business, and a real estate business. We run it as one P&L. And so there's a lot of information that we get as real estate investors that really helps to inform what we're doing. And importantly, within real estate, decisions decisions are made by the consumer and the corporations before they impact the real estate. So we do that to really try to get ahead of the trends. In addition, Vince touched upon these, the geopolitical issues today, the macro issues today. We have teams of people that are there that are advising us. So one of my partners is David Petraeus, as an example. He's the former director of the CIA. He's opining on all of the geopolitical issues that we might come up with. And there are countless other examples of that. So how does this translate into what we do in REPA? REPA is a theme-based investment strategy. So real estate cyclical. So there are moments in time when we want to invest in certain asset classes in certain markets, and other moments in time when we want to invest in different asset classes in different markets. What enables us to do that is this connectivity with the broader firm. The second thing is it's not just about how you invest, it's about how you portfolio construct, portfolio manage, and ultimately operate. So as I mentioned before, we've returned a significant amount of capital in this REPA strategy. A large part of that is because real estate cyclical, one of the best ways to hedge that risk is by being a balanced buyer and seller, which we've done and will continue to do. The second component is how you operate. In the world of opportunity funds, there are plenty of folks that allocate capital to third-party operators, and ultimately there's a lot of economics that are paid out to those groups, and those groups that are operating on behalf of the allocators, they might not be sort of quite as aligned as you'd like them to be. What we've done over time is we've built out our own operating capability that we control, some of which we own with you all, and that helps us accomplish what we try to do. So the market opportunity, I'd say today, is better than we've seen, quite frankly, since we began our business at KKR 12 years ago. The amount of dislocation in the real estate sector is tremendous, a lot of which, or most of which, is really being driven by these significant rate increases. And we've spent the last decade or so really building out our business, position ourselves to take advantage of this. So we're tremendously excited about where we sit, and we're very hopeful to continue that relationship with you all. I'll pause there and take any questions that you might have.
Great, thank you. Questions for KKR or staff?
Based on the recommendation, I'd like to make a motion, Madam Chair. Based upon the recommendations of the Council Investment Committee, Consultant Townsend, SIC staff, and general fiduciary oversight of RVK, I move that the State Investment Council approve a commitment of up to $100 million of KKK Real Estate Investment Partners for SCP, subject to and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiations of final terms and conditions, and completion of the appropriate paperwork.
Second.
That's KKR.
Second.
Okay, we have a proper motion and a second. Any discussion on the motion before the committee? Hearing none, we'll take a roll call vote.
Mr. Garcia Richards.
Yes.
Treasurer Montoya.
Yes.
Secretary Frost.
Yes.
Mr. Tejas.
Yes.
Ms. Allen.
Yes.
Mr. Bingaman.
Yes.
Mr. Jennings.
Yes.
Mr. Lavender.
Yes.
Mr. Messina.
Yes.
Mr. Summer.
Yes.
Madam Chair, the motion passes 10-0.
And we thank you all for being here.
Thank you, Madam Chair. Thank you, Councilman. Thank you, Keith.
All right, now we're gonna head back up to the top of agenda item 3 and go to 3B. And hear a presentation on the proposed asset allocation for the brand new Conservation Legacy Permanent Fund from Mr. Smith and RDK.
We are so pleased to have these two funds, Madam Chair. We want to do the best job we possibly can in managing them. Let me just make a couple of front-end comments. Well, first, let me refer you to page 63. I think that's probably where Matthias is going to want to start. Matthias is going to take you through the numbers. I just want to make a few preparatory comments here. Just as a reminder to you about how we approach these asset allocations, we always start with the legislation, so with the statute, to determine, the purpose of the fund, what sort of inflows might be expected, what the distributions are, and what these things might mean for the risk tolerance of the fund and the way the fund should be invested. So we have three primary portfolio types. One is aimed at growth, to try to grow the principal. One that's maybe a little more income generation, a little less concerns about growth, but more on income generation. And then last is safety of principle. So an example of a growth fund would be a land grant. That's a fund we want to try to grow the NAV of that fund. A little less concern on income generation, certainly concern on liquidity, but a little bit less so than the growth profile. One of the safety of principle funds might be the state tax stabilization reserve fund. That's one where we keep that principle stable and make sure that money is available if the legislature chooses to draw it down. So we go through that process. That takes us a little while to make sure we fully understand what's happening there. And then once we sort of figure out, should this be a growth fund or should this be a safety of principle fund, we'll run what's called a means variance optimization model. That's kind of a mouthful, and it's a fancy financial term. But what we try to do there is take assumptions about forward-looking returns, forward-looking volatilities or risks, and correlation among asset classes, and come up with a portfolio that will deliver a rate of return that's acceptable for us based on the profile of the fund at the lowest volatility that we can get. That tends to be the idea there. Now, keep in mind that model, that mean variance optimization model, or MVO, we shortened it down to, was developed in the 1950s. It hasn't changed a lot since. And I always say, either the model is that good, or we are that lacking in creativity that we can come up with something better. Now, so we run that, and that's what's on page 63. That's what Matthias will walk through here. We have one more step, particular to the way we allocate or come up with our allocation, and that is we overlay our macro views onto that allocation that comes out of the means variance optimization model. Again, the inputs for that model are, there's a high number of assumptions that go in there. So a return assumption for long-term, call 30 years, for each of the asset classes, a volatility assumption around that return. There's correlation assumptions among each of the asset classes. There's a whole bunch of numbers in there that even a small change in just a few of them can mean a big difference or a material difference in what the asset allocation winds up looking at. So to bring some qualitative analysis, we overlay our macro views. Those macro views, of course, are expressed in the annual investment plan. You guys look at them every year. We talk about them all the time. So we make that overlay, and then come up to an asset allocation that we want to recommend to the council. We went through that process, but in going through that process this time, we realized something, and that was the conservation fund looks an awful lot like the land grant in terms of its expected inflows and expected distribution, all those things we talked about before. And the opioid settlement fund looks a lot like the early childhood education fund. So while we went through the process that we always go through to come to the asset allocations for these two funds, because they look a lot like those two funds, having the same allocations made sense to us. It gives us sort of fewer allocations to be chasing. So instead of, say, for instance, conservation fund having 22% broad U.S. equity, 20% is not all that different, and it's consistent with what the land grant allocation is. So as you'll see, as Matthias goes through the numbers here for you, you'll see the conservation fund has the same. We're going to recommend the same allocation as land grant does, and in turn on the opioid settlement fund, we're recommending the same allocation as the early childhood education fund. That's not, I say all this because it's not coincidental. It's by choice and how we come to these. So we went through the same process, but we came up with nearly the same results, and it makes sense to us to just have a standard allocation for these funds. So with that, let's turn it over to Matthias. I know he's got a few comments about how the numbers came out.
Sure. Thank you, Madam Chair, and Vince, for those comments. On page 61 is sort of an intro as well that really helped shape the way we thought about this, and exactly as Vince said, in aggregate, as we're working through this, it became quite clear that we could leverage the existing good work that was done for the asset allocation, and we look at it really on an annual basis, but do the deep dive every 3 years or so, short of any major market dislocations that might require a more frequent look at this to see, okay, we really already have these good funds that are representative. You'll notice for conservation, there's actually in the language a mandate to invest with the same risk and return profile as land grant. So that was also a starting point, and for us, the baseline to say, okay, is there any overarching reason that would push us away from the land grant allocation? And the answer was no. So with that, I turn you to page 63. This is the same format. It is the main output of that mean variance optimization that Vince mentioned. Of course, supplemented by Monte Carlo and additional work that we do when we dig into these allocations further, but recognizing that land grant was going to be a very reasonable allocation for this fund on a go-forward basis, not just based on the mandate, but also based on the anticipated distributions and demands on those funds. We felt quite comfortable, so you'll notice at the top 1 through 10, that's your efficient portfolio, essentially what is used to build the efficient frontier. At each level of risk on the spectrum, how much return can you get? So it's essentially trying to optimize the risk-return ratio or Sharpe ratio along the way. So from very conservative in portfolio 1 all the way up to portfolio 10, you do place some minimum and maximum asset constraints on there, because even if, let's say, we wanted 100% in private equity, that's a realistic allocation. It would take a very long time. There'd be these liquidity concerns, so on and so forth. So we try to provide a range of outcomes that actually is within the realm of possibilities. And this is a lot of the same work that was used for the most recent land grant allocation, and these are the long-term targets. So you see for land grant and for conservation, about 40% of publicly traded equities split equally between U.S. and non-U.S. Then you have your fixed income and your private or non-core fixed income below that. And then quite noticeable use of the private markets aligned with, again, the annual investment plan and the outlook on those asset classes as part of our capital market assumption setting process. So you can see this is obviously a growth portfolio. You have almost 2/3, over 60% in capital appreciating or return-seeking assets, a little bit in preservation for a number of reasons, and then at inflation hedging assets as well. Those, both the preservation and inflation, tend to lean into the income component a bit more, so not relying just on appreciation and markups, but also having some yield components to their total return, which helps smooth out volatility. So that's all by design. You can see the expected average annual arithmetic return is 7.9, but by the time you factor in some of the volatility, you'd expect to get 7.4, 7.5%, which is in line with those expectations that we think is reasonable for the type of spending that's going to be required, certainly in light of the strong inflows that we have. The yield I talked about, that's that last line, just what's the percentage yield in that portfolio. You can see about half of it, 3.6, is coming from income. Similar process for opioid. There, when really the differentiation was that the spending requirement wasn't quite as high as on the conservation. So we said, okay, we need a growth portfolio, but one that isn't quite as heavy in growth mode. And early childhood is exactly that, where it leans a little bit more into the fixed income assets. So that's on page 66, for those following along online, and makes a little bit less use of some of the private markets, provides more liquidity and more flexibility around that. Seems quite aligned with the expectations of about a 5% spend rate, with a trailing, it sort of ramps up, but 5% seems to be where it's going to settle in at. And with a 7.6% expected return and about 2.5% inflation expectation, we think even without major inflows, that's a sustainable allocation. So we think both of those are good matches and should serve those allocations and their mandates well into the future.
So we've got these two recommended asset allocation proposals in front of us, and are there questions on either? The Conservation Fund or Opioid Settlement Fund, and we'll go to Madam Treasurer.
Good morning. Thank you, Madam Chair. So if we go first to the Conservation Permanent Fund, that's going to be about 50 million, correct? And is that,
Madam Chair, that's right.
and is that on an annual basis, or is that just what it is at this point, and we don't know what it will be in the future?
Madam Chair and Madam Treasurer, that's the initial funding of that fund.
Madam Chair, I think someone has their hand raised that they might know the answer.
Yeah, just the initial appropriation into that fund. There's no annual proposal. It's just
Okay.
a one-time.
Okay, because I do know on the opioid settlement, there will be a consistent flow of funds coming in. We're not quite clear on exactly how much is going to be coming in. And so I wondered more about the liquidity needs of what we put in there, what they're going to be wanting to take out, because I'm assuming you might take in some of the clients that might be county and city for the opioids as well, correct?
Yeah, no, we have some additional language as it's written on pages 69 and 70, and I think from there you can glean that there may be an expectation for conservation to ramp up to 150 million. What that timeline is, obviously we don't know, but that's part of the spending framework there. If the fund exceeds that, initiates a distribution, but clearly this is very much in its infancy.
Okay, and do we have any idea of when we would want to review the asset allocation, just in case more funding goes in this next after this next legislative session or fiscal year?
Madam Chair, we review these on a 3-year schedule. Unless something happens, we need to do it sooner. We can always do it at any time. So for the Treasurer's question, if there were a material inflow or something that we thought might affect the asset allocation, we could bring that in at the time.
Thank you, Madam Chair. Thank you, Vince.
Further questions? We have a motion.
Motion, Madam Chair. Based on the recommendations of the Council Investment Committee, SIC staff, and general fiduciary oversight of RBK, I move that the State Investment Council approve the asset allocation for the Conservation Legacy Permanent Fund as discussed, reviewed, and memorialized by the Council today.
I'll second that.
We have a proper motion by Member Binghamton, a second by Member Lavender. Any discussion on the motion before us? Hearing no discussion, let's take a roll call vote.
Commissioner Garcia Richards.
Yes.
Treasurer Montoya.
Yes.
Secretary Frost.
Yes.
Member Tejas.
Yes.
Member Allen.
Yes.
Member Bingaman.
Yes.
Member Jennings.
Yes.
Member Lavender.
Yes.
Member Messina.
Yes.
Member Summer.
Yes.
The motion passes 10-0.
Okay, and unless there are further questions on the opioid settlement fund asset allocation, we'll take that motion as well.
Madam Chair, based on the recommendations of the Council Investment Committee, SIC staff, and general fiduciary oversight of RBK, I move that the State Investment Council approve the asset allocation for the opioid settlement restricted fund as discussed, reviewed, and memorialized by the Council today.
I'll second that.
Okay, we have a motion by Member Lavender, motion by Member Bingaman, second by Member Lavender. Any discussion on the motion before the Council? Hearing no discussion, can we take a roll call vote on that motion?
Commissioner Garcia Richards.
Yes.
Treasurer Montoya.
Yes.
Secretary Frost.
Yes.
Mr. Tejas.
Yes.
Ms. Allen.
Yes.
Mr. Bingaman.
Yes.
Mr. Jennings.
Yes.
Mr. Lavender.
Yes.
Mr. Messina.
Yes.
Mr. Summer.
Yes.
Motion passes 10-0.
Excellent. Thank you so much for that. Next, we'll move on to agenda item 3B and hear about a investment proposal for Copenhagen Infrastructure 5, and we'll invite back Mr. Davis.
Thank you, Madam Chair. I'm here to propose that council make an investment in Copenhagen Infrastructure Partners 5 in the amount of $150 million with an additional $37.5 million to be invested in a co-investment vehicle. This investment will be in the real assets infrastructure bucket. I'm joined at the table by Daniel Cove, Investor Relations from CIP, and Tim Evans, who's a partner for the U.S. portion of the business. My content begins on page 72 of your board books, and the manager presentation is on 113. In terms of the firm, CIP is a market leader in utility-scale developments of renewable power and energy transition projects that are reliant on mature technologies. The firm is majority employee-owned and is based in Copenhagen, Denmark. In terms of track record, the flagship fund series of which this vehicle is a part has delivered net returns nearly 17% and 1.5 multiple on approximately $7 billion of invested capital as of year-end 2022. In terms of investment focus, the company focuses on three categories of investments. First is offshore wind, second is onshore wind and solar PV, and then a third bucket, other energy transition, including pump storage, battery storage, and transmission capabilities. In terms of strategy, the company seeks control investments in 20 to 25 large-scale developments that will require somewhere between $200 million and $1 billion, or euros rather, in equity commitments. At a minimum, the fund is targeting a 10% net IRR. If you look at the levered IRRs that are being underwritten in the market for producing renewable projects, those are in the single digits. Generally, we think of this as a bad thing, right? Lower is better when we're talking about returns, but it is indicative of the ready marketability of newly completed projects. Things that we like about this investment include the development-oriented focus, and also that they have a rolling fund structure that enables the fund to seed a portfolio of known partially de-risked projects with the potential to absorb the entirety of the fund's capital commitments as those projects are developed. The GP has great experience from a development perspective and expects through its underwriting process to be able to capture something on the order of 200 to 500 basis points of development margin. Another key element of this strategy that we like is they're a global player, and we think this global footprint will contribute to the geographic diversity of the real asset portfolio on the whole. With that, I will hand over to Daniel, I think, if you would like to lead off with a couple comments on the firm before we go to strategy.
Perfect. Now, I think I'd like just to highlight some points on the fund that we're speaking. So this is our fund number 5 on the flagship side. Have been doing this in the firm for 11 years. But as my colleague Tim Evans will mention, our team has been doing this together for over 25 years. This fund is our fund number 5 in the same spectrum, with a very strong track record, both in constructing the projects but delivering returns over those projects. This fund targets 12 billion euros. A few weeks ago, we had the first closing of that fund for 5.6 billion euros, so almost half of the target size of the fund has been committed from existing investors as well as new investors from all the geographies, North America, APAC, and Europe. As Kip mentioned, the fund targets 10 to 12% range on the net base, which has been on the bottom of everything that we delivered in the last 4 winters.
Good. Thank you, Keith. Thank you, Daniel. I'm Tim Evans. I'm a partner with CIP. Daniel and I are based in New York, but the firm is obviously based in Copenhagen, Denmark. And we have not been in front of you yet, so I wanted just to talk for a few minutes on a background of who we are, what we invest in, and then where we see things going forward. And I think we've provided some slides, which I don't tend to go through slide by slide, but I think for those on the phone, I will start on, I think it's slide 117 for you, just to give a bit of the background on us. Our founders came out of a company called the Danish Oil and Natural Gas Company, Dong Energy, which today is known as Orsted, and we're really charged with commercializing renewable business for that company. So we're very much all energy people that became fund managers along the way. Today, we are the largest renewable development fund manager in the world. We have about 25 billion euros of asset under management across multiple fund strategies. And we have over 14,000 megawatts of different power projects that we built or in the process of building, which is the equivalent of being able to supply power for about 12 million homes. We very much have an industrial value creation approach in building and developing our power projects and doing it on time and on budget, and we'll get to our track record in just a second. And this is led by a team of about 1,200 people across the world. And we are developing a significant portfolio of projects totaling about 120,000 megawatts, which is among the largest portfolios in the world. If we go to your slide 119, what is our investment focus? It's very much, as Keith alluded to, a greenfield renewable investment focus on those types of opportunities. What does this mean? It means that we develop new renewable power projects, whether it's offshore wind, onshore wind, solar projects, or battery projects. We enter very early into a project's life cycle, oftentimes where there just may be parcels of land available, and we advance those developments over many, many years until we ultimately make decisions to build them. And what triggers that decision is our ability to de-risk these developments, such that we've secured all the permits, all the land. We've locked up most of the capital, CapEx items and cost items, and then locked in the revenue side as well. And then we build the projects and operate them once they're running. And our view is that by coming in early, we're able to realize a higher return, what we call the greenfield premium, and that is very different than actually buying an operating asset and looking to improve that over time. What you see on this slide, I think, is a couple things. One, we do this globally. We do it across all the three major developed sectors of the world as we define it, so North America, developed Europe, and developed Asia, but most of the capital is actually deployed into North America. About 40% of the money we commit into North America, and most of that is in the U.S. We do it across all the mature renewable technology types, solar, wind, et cetera, as I mentioned, and our investors like this diversity because doing a wind project in Australia, as you see on this slide, there's an example called Lotus Creek, is quite different than doing a solar project in the U.S. Or in Utah or something like that. So they like that diversification. I think the last thing this slide highlights is we do it in scale. We're building very large, very complex projects, and we think that ultimately allows us to drive higher returns to our LPs. How do we do that? Slide 121, I think, just briefly references the team. As I said, 1,200 people globally with varying skill sets that complement each other, whether it's on the investment side or the development side or the operations side. We have an extensive footprint globally, and we also have not only just within house, but we have certain network companies or vendors that are exclusive to us, which gives us a competitive advantage versus other folks that are looking to do this. And so I think maybe, and so wrapping up, if we go to slide 123, I think we try to note sort of three key reasons for this Fund 5. I think the first is the market, and the second two are more distinct to CIP. But I think from a market perspective, it's a very favorable time for renewables. We see double-digit growth across all the different regions that we are active in. And so there's driving significant demand for our product once we get our plants built and operational. I think, secondly, from a scale perspective, we're the largest by far in this space, and we have an ability to negotiate with our various counterparties in a way that others who don't have that same scale are not able to do so. I think the ability to have a diversified portfolio across different regulatory regimes and different markets is also something that's very attractive to our investors. And then lastly, again, our track record and team, we've been doing this since 2012 in our current form, but many of us have been working together for far longer than that. And I think we've had a very successful track record at this point across our multiple fund strategies, and are certainly looking forward to something similar with Fund 5 here.
Any questions?
Great. I would only just encourage you to remind your developers to take a look at particular state plans in New Mexico for development.
Madam Chair,
Questions? Yes, Member Summers.
what do you find in terms of transmission ability in the U.S.? I see you have quite a few projects in Texas, and it looks like eastern New Mexico.
We have, so we actually do some transmission development ourselves. I think that's, we don't do a lot of it, but we do some of it. I think from a plugging into the grid perspective, taking a power project and actually plugging into the grid, that is a hurdle, I think, across any market in the U.S. I think certain markets, it's probably easier to plug in, say Texas, where there's limited permitting requirements and lower capital required to do that. In some ways, that's actually detrimental because it's too easy for folks to do that. So we focus on all the markets in the U.S., but really Texas is not a huge focus for us. We focus more in the mid-Atlantic regions of the U.S., which make it oftentimes harder to get your projects constructed and harder to get them plugged into the grid because of the transmission shortages that you noted. But that once you do, there's a scarcity value associated with those projects, and they command a higher premium when we ultimately exit them. So it is a concern, but it's not one that really hinders us significantly.
Thank you.
Further questions? We have a motion.
Madam Chair, based on the recommendation of the Council Investment Committee, Consultant Townsend, and SIC staff, I move that the State Investment Council approve a commitment of up to $150 million to Copenhagen Infrastructure 5 SCSP and up to $37.5 million to a co-investment vehicle subject and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Second.
Okay, we've got a motion by Member Lavender, a close second by Members Summer and Bingaman. Any discussion on the motion before the council? Any discussion? Hearing none, we'll move to a roll call vote.
Commissioner Garcia Richards.
Yes.
Treasurer Montoya.
Yes.
Secretary Frost.
Yes.
Mr. Tejas.
Yes.
Ms. Allen.
Yes.
Mr. Bingaman.
Yes.
Mr. Jennings.
Yes.
Mr. Lavender.
Yes.
Mr. Messina.
Yes.
Mr. Summers.
Yes.
Measure passes 10-0.
Okay, great. And we appreciate you all being here with us today.
Keep your eyes on New Mexico.
Thank you so much.
To our renewable strategic plan, does this count?
Yeah, well, this is going to be in the infrastructure part of the real asset portfolio, and that would contribute to the renewables piece.
Thanks for your trust.
Okay, let's move on to giving 3E since we already did it.
Yeah.
3F, Altera iOS.
We're finally getting to F now.
Sorry. You know, you're right, Good.
Mr. Pingle.
Thank you, Madam Chair. So we're here to recommend an investment in Altera iOS Venture 3. This is a new relationship for New Mexico, and we're extremely excited about it. We're looking for an approval of up to $100 million. We're expecting that we'll actually only get about 75. Seems to be, no pun intended, a pretty hot property in the real estate space. Also looking for approval of a $25 million co-investment vehicle alongside our investment in the fund. This strategy will fall into the non-core bucket within real estate. I'm joined here today by Leo Adamondo, who is the founding partner of the firm. My memo is on page 187 of your board books, and the presentation from Altera begins on page 218. The firm is a Philadelphia, Pennsylvania-based manager that's wholly owned by three partners led by Leo. They have prior institutional investing background, running assets for a number of institutional capital partners that included Blackstone, BlackRock, Carlyle, and JP Morgan. The investment return target is in the 14 to 16% net range for this strategy. So what is industrial outdoor storage? These sites are usually lightly developed but mission-critical properties with zoning that allows for light vehicles and other parking and storage of containers or heavy equipment that support transportation, logistics, and construction-oriented industries. Key elements of the underlying properties, they tend to be very low CapEx to maintain or to re-tenant, and because of the relatively low levels of development on the properties, they also carry a pretty low tax burden, and so pretty attractive economics on the properties and low carrying costs. So why industrial outdoor storage? One, large, highly fragmented market that is 95% held in private hands. It's much like the public storage market was maybe a decade or more ago. The market is driven by substantial demand drivers, including growth in e-commerce and infrastructure that we're all seeing currently. And then the supply side of the supply-demand balance is pretty compelling. There's a shrinking supply attributable to competition from other uses, as well as difficulty in terms of obtaining the necessary permits for alternate sites. We find that national tenant needs are tending to be underserved by a disparate network of local-owned properties. And then finally, we find that the portfolio that Altera will build will offer some diversification to our overall real estate portfolio. It's a high prospective return specialty segment that would fall outside of the core strategies that you would normally find in Odyssey-oriented funds. The strategy of the GP is a value-oriented one with components dedicated to mark-to-market of the existing rents, re-tenanting, sale, leaseback, and build-to-suit, and then focused on improving the optionality of the plots of land that they're able to identify. Without going into additional detail on that, I'll leave it to Leo to touch on those. Key elements that we like about Altera. One, this industrial outdoor storage is a highly fragmented business that's undergoing an institutional transition, again, much like public storage that I had referenced earlier. Altera is a small firm, and the size of the properties that they acquired tend to be in the $5 to $15 million tickets, so essentially below institutional radar, where there's relatively less competition. They're able to acquire a portfolio of assets and then remarket it at a premium. You've heard similar stories from Exeter when they presented to us previously. This is the only high-quality pure play that we're aware of in this space, and that's one of the reasons why allocations are likely to be tight. Another component of the strategy that we like is the direct sourcing. Their deal flow is about 85% off market, and then because they're doing deals directly, there's typically not a second layer of fees and promote related to operating partners, and that's you could call it a feature or a bug of a lot of real estate-oriented strategies. I'll stop here and hand over to Leo for his comments. Thanks, Leo.
Thank you. Thank you, Madam Chairwoman and members of the council for your time today. I'll attempt to be brief given your long agenda. I'm Leo Adamando. What Keith said, I founded a business about 19 years ago. It's a 90-person firm based in Philadelphia with offices in Chicago, San Diego, and Pittsburgh. We are the largest owner and operator of industrial outdoor storage properties in the U.S. as far as we can tell. It is a nascent asset class to institutional real estate investors. Just to piggyback off some of the prior presentations and give you a sense of market size, the outdoor storage market is roughly 10% of the total industrial market in the U.S. That makes it roughly $200 billion of the $2 trillion market. That makes it roughly 5 times the size of the data center market. Makes it 3 or 4 times the size of single-family homes for rent, and about half the size of the self-storage market, just to give you a sense of how large the market is in the context of other investments you might have or be considering. We have a 90-person company based in Philadelphia. 20 of them are specifically dedicated to industrial outdoor storage. We have a legacy multifamily development and management business that is in sort of running in stealth mode as we grow the outdoor storage portfolio. We started in this sector of industrial real estate 8 years ago through a tenant relationship, a crane company called Maximum Crane Works. We We've since grown to over 200 properties in over 30 states and over 90 current tenant relationships. As Keith said, the two primary drivers of demand for industrial outdoor storage real estate is really the growth of the economy and accelerated by the growth of transition of brick and mortar commerce to e-commerce and the large amount of infrastructure spend that we started and will have to continue for frankly decades going forward. There is also an oil and gas petrochemical component to it. Yesterday, I was in Denver visiting our properties, and I visited a 20-acre yard we have in Bragg, Colorado, which is outside of Denver. And it's leased Occidental Petroleum. We have several oil and gas driven tenants and properties. Those fall under infrastructure in our definition. We tend to be a little more than half logistics and transportation in terms of our tenant mix, and a little less than half infrastructure. Our current fund, Venture 2, is about 2/3 logistics, transportation, and 1/3 infrastructure. A lot of folks are wondering, what is industrial outdoor storage? I think Keith did a good job trying to explain it, but I'll be brief in saying that the U.S. economy is $25 trillion. A little less than half of that is goods, not services. The goods economy is very simply defined as a product is manufactured domestically or it's imported. When it leaves the factory or the port, it makes 3 to 5 stops until it gets to your homes, or let's say Walmart as a proxy for retailers. Those stops are the warehouses. You all own billions of dollars directly and indirectly through your different investments. But there's a layer of real estate below that called outdoor storage, or we call outdoor storage, that provides the supply chain and infrastructure back office real estate needs that a lot of the companies that move the goods around and build and maintain the infrastructure that facilitate the movement of goods require. Everything from truck parking to truck repair, contractor yards, building materials, oil and gas, upstream, downstream, pipeline, maintenance, oil field services, lots of building materials, vehicle, non-truck vehicle and fleet storage and repair. All of these yards, if you will, they usually sit between 3 to 5 miles, the interstate, the airport, the port, or the intermodal. You look at them every day as you drive to and from, your homes and work probably. You look right past them, right? There's low-density things off the freeway that if they didn't exist, you wouldn't get your Amazon packages and Walmart's shelves wouldn't be full. And a lot of the infrastructure projects that you see wouldn't be able to, well, seemingly they move slowly, but they wouldn't move at all because there'd be nowhere to put the materials and the trucks and all the other heavy equipment that is required, to complete the infrastructure work, build buildings, maintain buildings, and grow and maintain our country's infrastructure. We have a very large technology investment platform that puts us at a huge advantage to our competitors. In fact, there is no good data set in outdoor storage, whereas there is lots of data for other types of real estate. You could go on CoStar or RealPage and you could figure out what apartment rents are in any market. You could figure out what industrial rents are. But if you go on CoStar and you look at what is the rent for XYZ low-density industrial property, which we call outdoor storage, you would see it's $140 per square foot of the building. That makes no sense because the building is free. What people are renting is the yard. The building is an add-on to it. So while 90% of our properties have buildings on them, they're largely used for the outdoor storage, repair, and other, work on these pieces of heavy machinery, capital equipment, containers, a lot of shipping container storage. That's a very large, part of the outdoor storage market. The single biggest risk and opportunity in this category of real estate is zoning. Simply put, municipalities do not like more outdoor storage because it is low tax rateable, it's low building coverage, it's low job density, it doesn't look particularly pretty, and it creates wear and tear on public infrastructure. Yet without industrial outdoor storage, the economy does not function. That's not an overstatement, it's a fact. And the more you talk to people in the industrial business and tenants in the outdoor storage business, the more you realize that their needs are very similar and their available properties they can lease are shrinking. So the economy grows, you need more warehouses, you need more outdoor storage, but what's happening is because of municipal resistance to allowing zoning variances and growing their exposure to outdoor storage, you actually have a supply picture which is quite stagnant. It's exacerbated by the fact that you have a large transition of low-density industrial to vertical warehouse development over the past 10 years, where you still park, tractor trailers and shipping containers and things like that. Now you see, 40-foot, 2-foot clear industrial warehouses. It's very easy to turn a yard that is the right dimensions into a warehouse because the zoning almost always allows for it, but the inverse is not true. So it's very difficult to grow the total supply of outdoor storage. We have very deep tenant relationships, very deep brokerage relationships, and we're very excited about, you know, the opportunity in front of us right now, particularly as the capital markets are dislocated. A lot of high-quality tenants are looking to potentially sell real estate to redeploy their capital into other uses that might be more productive for them. It gives us a great buying opportunity to do some high alpha sale leaseback opportunities, which is a part of our strategy, although it's, you know, probably 20% of what we do. It's a little higher today and will be going forward while the capital markets stay dislocated. I'll just leave it right there and leave it for any questions Bill might have about, you know, the firm or the strategy or, you know, what is outdoor storage.
You all are like, I just left Memphis, and everywhere around Memphis is nothing but warehouses. And all you are is you're a place to store the train cars before they get to the warehouse.
That's part of what we do. Memphis is a great example. We own a bunch in Memphis. It's a very large intermodal market, but also because of the air hubs, the air cargo hubs.
Yeah, that's
right. Yes, we every million square feet of warehouse requires between 20 and 30 acres of ancillary industrial outdoor storage. That's everything. And people don't really appreciate that. It's everything from where the trucks go between drop off and pick off. It's where the sprinter vans, the last mile vehicles go. It's where the contractors who build that warehouse and also maintain all the infrastructure that warehouse and all the other warehouses need to function. So every $1 billion of commerce is 1 million to 2 million square feet of warehouse. Every time that goes from brick and mortar to online, it's an additional 1 million square feet. So you just run the math on that, and you realize that the supply is pretty limited in the entire country, particularly because transportation costs are 50% of all of our tenants, you know, cost structure on the cost side. For them to move, whereas rent is 4%, for them to move 20 miles outside of town to where you might have available land to store the trucks or to repair the trucks, they can't do that because an 8 times increase in rent is equal to a 1 times increase in transportation costs because of the ratio of their cost structure. So yes, that's part of what we do.
Speaking of intermodal, do you have your eye on New Mexico's border with Mexico at all, Santa Teresa?
We do. The cross-border stuff is can be a little bit tricky. We actually do own a yard, United Rentals rental facility in Albuquerque. That's the one property we own in New Mexico. The cross-border stuff can get a little bit tricky, particularly where you're in these managed freight zones where you can't actually own the real estate. You end up having to be a tenant, a long-term tenant to some of these kind of port or intermodal regimes. We really like to focus on multimodal markets where we can get both air and freight. So we haven't focused that much along the border, whether it's New Mexico or Arizona or Texas. The markets where we're frankly heavily concentrated in places like Savannah, Dallas, South Florida, the Inland Empire looks very difficult to find in there right now. Port of Seattle, around there, Port of Oakland. We have a fair bit in Chicago and Kansas City. Those are multimodal markets. So the more demand drivers that we can kind of lean into, the more interested we are in the market in a particular property. As it turns out, 80% of the tenants in our business are looking for the same thing. They want to be 3 to 4 miles from those demand drivers on 10 acres with a 10,000 square foot, 20-foot clear building with good ingress and egress. And what I just described captures 80% of all the tenant requirements across the country, agnostic to the market itself.
You got a lot of places with hot dry storage.
Yeah.
Can't beat it.
Can't beat it.
We got big trains go across, they go all the way, all the time.
It's mayor of a small town in southeast New Mexico. Not a small town, big city.
Got some room in Roswell.
Yeah, we give them free diesel and stuff, taxes and everything, if they're on the trains.
Yep, you listen.
We do all of
That's, okay. Maybe that can be a private negotiation. I don't know about the free diesel. Online, I was thinking.
Off of it.
Okay, we're not giving our resources away.
Makes it free.
Do I have someone that's ready with a motion?
Do you want me to?
Yes, sir. Yeah.
Got it. Based on the recommendations of Council Investment Committee, Consultant Townsend, SIC staff, and general fiduciary oversight of RVK, I move that the State Investment Council approve a commitment of up to $100 million of Altera IOS Venture 3 LP and $25 million to a co-investment vehicle subject and contingent upon the New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Second.
Got a motion?
Yes, I move that.
Oh, you said that?
I did.
Well, he said
Yeah, that's okay.
He tells him to give the motions, and then he seconds it. It doesn't, the way he does it. He fixes
We've got a motion by member Summer, a second by member Lavender. Any discussion on the motion? Hearing no discussion, can we take a roll call vote on the motion?
Commissioner Garcia Richards.
Yes.
Treasurer Montoya.
Yes.
Secretary Frost.
Yes.
Mr. Tejas.
Yes.
Ms. Allen.
Yes.
Mr. Bingaman.
Yes.
Mr. Jennings.
Yes.
Mr. Lavender.
Yes.
Mr. Messina.
Yes.
And Mr. Summer.
Yes.
Motion passes 10-0.
All right, great. Thank you so much.
Thanks for your time.
All right, so we're skipping 3G because we already did it. We'll go on to we've got a slew of private equity investment recommendations here, 3 in a row. I'll turn it over to Mr. Cassidy.
Morning. So we're recommending 2 investments for the national program this month. Both the national program investments are new strategies we've set up by experienced teams to take advantage of an opportunity they see in their respective sectors. In each case, they have earned insight about their sector, and they've created a team and a fund around the opportunity set to take advantage of it. So first off is Arctos. We're recommending a $50 million commitment to Arctos Keystone Partners Fund 1. I note that we may look to potentially increase the commitment at a later meeting, depending on how the fundraise goes, but we want to make our first commitment for their upcoming close, so we qualify for certain fee discounts provided to founding partners. We knew some of the Arctos team, in particular Ian Charles, when he was at Landmark earlier in his career. That's a position in our legacy position in our portfolio. And he started the organization, and he left Arctos to set up a new firm. They initially started with the first fund that invests in professional sports organizations, and now they're starting a strategy they're calling Keystone, which is more comparable to some of the things that they did at Landmark to provide financing solutions to private equity firms and other alternative investment firms. And just like any business, general partners, they need access to growth capital, and they need funding at certain moments in time. And the earned insight of Arctos is the current solutions in the market provided by secondary and GP stakes firms really aren't the best solutions. And so they think they can set up a new strategy which is more flexible, creates solutions of better alignment between LPs and GPs, which is very important for us as a limited partner in private equity funds generally. We like the strategy. These are investments that are highly structured with lots of downside protection, but they also have the asymmetry look forward in equity investment. I'll pass along to Richard.
Yeah, I'll just be brief. As Chris mentioned, this is a new relationship for the national program, and we have known the firm's senior team for a long time, as they were previously part of Landmark before, which is a well-known secondaries firm. And in the national program, you have 2 investments with Landmark funds. What really brings this fund opportunity that makes it attractive for us is the market dynamics right now. I mean, if you take a step back and look, we have higher interest rates, retraction of bank lending, fundraising slowdowns, and limited partners wanting or needing liquidity from their private markets portfolio. And these are issues that we think will only continue to grow, and it's increased the need for capital solutions out in the industry. And that's one thing that Arctos Keystone strategy directly addresses. through these issues by providing solutions to investors in the private asset class, which you'll hear more about. The fund is being led by a seasoned team. In addition to co-founder Ian Charles, two of the four senior professionals previously worked with Ian at Landmark Partners, executing secondary related transactions. And the other two professionals, part of the team, have deep operational investing experience, which are additive to the strategy. As Chris briefly mentioned, if the SEC will invest as part of their first close, there will be a fee discount, which is a positive to the structure of the fund. We're recommending an up to $50 million commitment to the fund, and I'll turn it over to Ian Charles for his presentation.
Will any future investments we do have the fee discount as well, or?
Yes, that's how it is structured. Okay. Yep.
And look, my name is Ian Charles, managing partner of Arctos. I appreciate the opportunity to be here. I'm grateful for the opportunity to potentially be your partner, and that was before I even knew there was free diesel on the table. I spent 20 years in illiquid markets, helping innovate and lead investment practices around unlocking constraints that other asset managers face across the illiquid environment. I left Landmark, where I was senior partner, was there for 15 years, to start Arctos 4 years ago. Keystone is our third fund, but it's our first fund focused on helping other asset managers finance change, opportunity, and unlock constraints.
Pleasure to be here. John Stott. I'm a partner at Arctos. I started my career in investment banking, spent about 15 years at Landmark Partners, where I was a partner helping us co-lead our North American activity. I spent about a year with McKinsey Strategy Consulting, focused on private equity. Arctos.
So at its core, Arctos' ethos is to be an innovator and a disruptor in very illiquid markets where we feel like the inefficiency there gives us a right to win and generate very attractive returns for our partners. The Keystone strategy is designed to help the 200 best and largest private markets firms grow, change, and evolve in a really challenging and changing market environment. Higher interest rates, investors with allocation constraints, those are changing the way alternative asset firms kind of grow. There's a slowdown in the growth rate of those firms. There is capital concentration happening with some of the biggest organizations. There are leadership and generational changes, product proliferation. And if you are part of the leadership team in those organizations, navigating and managing that change is very difficult. Our firm uses data science, a history of innovation, and operating these businesses to be a thought partner for those teams and leadership groups. And we bring capital to the table to help finance the solution to help them across their entire ecosystem. It could be at the portfolio company level, fund level, product level, balance sheet level of the firm, or ownership level. Our goal is to build a highly diversified portfolio, 20 to 25 positions, downside protection, very strong alignment with these managers. We do it well. There will be very strong yield, especially the first 3 to 5 years of the investment portfolio. We'll generate very attractive risk-adjusted returns with low 20s and mid 2 times our money net, again with very high yield and downside protection. To originate those opportunities, we've invested a significant amount of time and resources into a data science and research platform that we call Arctos Insights. That group provides unique data capabilities and analytical capabilities to managers to help them understand what they're good at and what they're not, and where they have a right to win and generate attractive returns for their investors. We do share some of that work and some of those tools with our investors if they find that useful in their own practice. And so there's a whole host of services beyond just managing the capital of our investors that we do provide them. More than happy to take any questions that you might have about Arctos or Keystone. Again, grateful for the opportunity to be here with you today.
Questions from council?
I would suggest that when I look at all these nice pictures of all these wonderful people on the thing, and I look where they've come, where they're from, there was one student from Texas Tech. Everybody else was from the East Coast. Looks like, damn near looks like.
You got a couple horned frogs in there too from Texas.
Now you got some horned frogs?
Yes,
Well,
sir.
you know, At least that one from, Texas Tech, or New Mexico Tech, they're not horned frogs and they're not Lobos and they're not Aggies, but they're smart enough to be on anything if they're over there. So we have a little bit somewhere, at least one of them.
Send us some logos. We're more than happy to sit down with them.
Well, Aggies would be better.
We can talk about that all.
We got other Aggies. You'd like to have number
Yeah, you want the table moved.
Thank you. Anything further, Member Jennings?
No, that's it.
All right. Anyone online? All right, do we have a...
Madam Chair, based on the recommendation of the Council Investment Committee, Consultant Mercer, SIC, SIC staff and general fiduciary oversight of RBK, I move State Investment Council approve a commitment of up to $50 million to Arctos Keystone Partners Fund 1 LP, subject to and contingent upon New Mexico legal requirements, New Mexico State Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Second.
Got a motion by Member Lavender, second by Member Zingerman. Any discussion on the motion before the council? Hearing no discussion, we'll take a roll call vote.
Commissioner Garcia Richard.
Yes.
Treasurer Montoya.
Yes.
Secretary Frost.
Yes.
Mr. Tejas.
Yes.
Ms. Allen.
Yes.
Mr. Bingman.
Yes.
Mr. Jennings.
Yes.
Mr. Lavender.
Yes.
Mr. Messina.
Yes.
And Mr. Summers.
Yes.
Motion passes 10-0.
Thank you very much.
Good luck, guys. Thank you.
It's kind of exciting, right?
You bet.
All right. We're going to look at agenda item 3I, TCG Lab.
So we're recommending a $50 million commitment to TCG Labs Fund 1. At a high level, as a reminder, healthcare and biotech are roughly 16% of the Burgess Venture Capital Index. We're building what we think is a really great diversified biotech venture capital portfolio. This would be, if it's approved, our third commitment to a biotech firm. Made an investment in Cure Ventures, which is an early stage firm. Early this year, we invested in TCG Crossover, which is a crossover later stage public and private strategy, which is a different firm but is affiliated with the Column Group. And this month we're bringing the Column Group, and we're quite excited. The Column Group is really one of the premier biotech VC firms. Mercer's had a relationship with them for a long time. And they're raising a new strategy, which they think is a more efficient way to develop certain types of drug targets. And really their earned insight is that pharma companies actually prefer to buy an individual drug for their intellectual property pipeline rather than buy an entire company that has maybe some pipeline or physical assets or things that they actually don't want in a larger company. So the benefit of the strategy is that, they believe it'll be a more capital efficient approach, which will result in ultimately higher returns. And I'll let Tim speak about the strategy in more detail, but I'll pass it along to Richard to talk about the fund and the Column Group generally.
Thanks, Chris. Yeah, I'm going to let Tim talk about the strategy too, because it is an interesting strategy. As Chris mentioned, the biotech investments are a sizable portion of the venture capital market, and this fund continues the goal of gaining exposure in this space while also increasing diversification within the portfolio. The team involved with the Column Group have incubated drug ideas historically. The approach that this fund is taking is an innovative one, and we think is an exciting one. Particularly with what pharmaceutical companies are looking for from the industry. We like that this fund is run by a senior experienced team with over 3 decades of experience in the biotech and pharmaceutical industries. Tim Kuskey, who's here, managing partner, has 24 years of experience and 16 years at the Column Group, so a long history with the firm. They also have the support of several scientific partners in the community. And looking at the track record of the Column Group, they have generated a strong track record in their flagship funds with multiple investments generating outsized returns, which we like to see. Regarding terms, as you know, because you've looked at a number of venture capital investments from us, venture capital funds can have some aggressive terms, but we view that it's worth it to invest with an experienced group like the Column Group in this area. So we're recommending a commitment of up to $50 million to TCG Labs, and I'll turn it over to Tim for his presentation.
Chris, Richard, thank you. Madam Chair, council members, thank you for the opportunity. It's great to be here. I'm proud to be entering my 17th year with the firm. Just by way of background, I'm a biochemist by training. Finishing my academic work, I joined drug discovery and biotech, and then the Column Group at inception in 2007 when the firm was launched, which was an exciting time. Taking you back, biotech at that time, biotech VC at the time had a little bit different model. The gaze was much shorter. It was about building broader portfolios of investments with short-term return potential. Biotech, in short, has lost its vision. My partners at the time, Dave Goodell, who was the first scientist hired at Genentech, responsible for their first 5 blockbuster drugs, including cloning human insulin, and Peter Sundelson, who founded the firm and had raised hundreds of millions of dollars for biotech at the time, asked why. Why had biotech lost its vision? Why aren't we creating the next Genentechs or Gileads or really leveraging the excitement around translating science into fundamental change in human health? And so they started the firm with that audacious notion, creating the next Genentech, and really flipping this idea of picking proposals that come in and turning it around to what was the first company creation strategy. So instead of reviewing hundreds of proposals that are inbound, deciding on maybe a subset of 50 to due diligence on, and maybe we'll make 10 investments, instead we turn that around and spend almost 100% of our time on companies we want to build. For the last 17 years, we've amassed a scientific network and advisors that I think largely unmatched in the biotech sector to help us hone in on areas of science that we think are right to build a new company, and then we roll up our sleeves. So it's not about picking stocks, picking assets, they're really about jumping in the trenches and helping to build those teams. Our view is countercurrent. It wasn't that it's lucky that you get successful. Maybe a drug will work, maybe it won't. It's that you can make one if you dig in and have a longer-term vision. So that was the whole basis of the Column Group, launched 16 years ago. We're now investing out of our 5th fund, a number of other ancillary funds that help us manage those investments. And we're excited for the first time to pick up our gaze and look at an evolution in that strategy. Because a lot of things have stayed the same. Great science is still great science. If you can have an impact on human health, you can derive great value from that. But many things have changed about the model over the last 17 years. And we saw 4 really principal threats, the general biotech VC ecosystem, that we think this vehicle is designed to try to address. The first is it's gotten a heck of a lot more expensive to do biotech, starting from the early days. The capital intensity is really high. To get to a point where pharma or other investors will recognize that value is requiring almost double the capital that it did before. So that means more and more rounds at earlier stages, which diminishes our overall ownership. And that dilution is really critical because if you don't own a lot of your home runs, you're not going to have a home run fund. So those 2 key things were a critical threat. The third one, talent, people. So when we started the Column Group, we were launching highly differentiated companies. That model has been much emulated now, and we've found ourselves in the last 6 years in very much a talent war. These are very limited resources. So the idea of starting a portfolio of 10, 12, 14 companies, that's a dozen new management teams. That's a dozen new research teams. And it's very difficult to fight against the flow and competition from other sources. And the final one is exit. So years back, pharma was buying capabilities, buying teams, buying platforms and technologies. That gaze has shifted now. They're buying assets, really to fill holes in their commercial pipelines and a number of drugs that have come off patent, so there's significant revenue losses they're facing. And so their view is entirely on tangible assets. The TCG Labs function is try to address many of those, to adopt a much more capitally efficient model around a team that we know. Jinlong Cheng is one of the most profound drug discoverers that we've seen in a generation. He's someone I've worked with 16 years, and that history goes back much further for even Dave and Peter. So address the team by a team of operators that we know can deliver, address the capital efficiency by the nature of the model and how we can leverage the broader TCG ecosystem to have a lot of input programs within that, and a quick kill mentality so we advance only the most promising as they go forward. And address the exit by packaging those in vehicles that we can sell off those individual assets to pharma without giving away the broader team itself. So an evergreen type model with regard to that, which we think much better addresses where this industry is going in terms of what pharma is willing to pay for. That'll pause and take any questions that you have.
How do we treat the manufacturing of drugs on the United States soil? Instead of going to China?
Yeah.
How do we do it?
Yeah, it's tough. It's one that's Square and Pharma's lap to try to solve. The U.S. economy pays a huge premium for drugs. That's what drives much of the ecosystem. Manufacturing of drugs, how to onboard that in a cost-effective way to deliver lower-cost medicines, which is what everyone wants. I think it's a challenge.
So drugs get to be a political weapon just as much as anything else in the world. Doesn't matter whether it's the diabetes, insulin, or whatever else.
Madam Chair. What's the success rate for for your investments?
Yeah, so I can answer that in a few different ways. So we've created about 47 companies. I think in the current portfolio, we have shut down or recouped capital from about 8 of those companies. The remaining continue to grow and create value. We've exited about 24 companies from that. Mergers and M&A represents the most attractive exit for us because we've minimized the dilution of trying to move through the public markets. So in general, our M&A exits we're able to drive anywhere from 10 to 20x from those. It's about half to a fifth of that if we go through the public realm. So I think the track record in general has been much higher than you typically see in biotech VC, and in a large part that's because we hang on and stay with the companies, find creative ways to financing them. And if you give a good team enough time, they can be successful in this game. We've seen that again and again.
Thank you.
Madam Chair, based on the recommendation of the Council Investment Committee, Consultant Mercer, SIC staff, and General Fiduciary Oversight of RVK, I move the State Investment Council approve a commitment of up to $50 million to CG Labs Fund 1 LP, excuse me, subject to and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
All right. I'm excited about it.
Tired of hearing my voice.
Okay, we've got a motion by Member Lavender, second by Member Jennings, Mayor Jennings. Any discussion on the motion before the council? Seeing none, let's take a roll call vote.
Commissioner Garcia Richards.
Yes.
Treasurer Montoya.
The greatest needs in this country.
Pass.
Secretary Crops.
Yes.
Mr. Tejas.
Yes.
Ms. Allen.
Yes.
Mr. Bingaman.
Yes.
Mr. Jennings.
Yes.
Mr. Lavender.
Yes.
Mr. Messina.
Yes.
And Mr. Summer.
Yes.
And the treasurer passed.
So we have a 9.
Madam Chair, if you can put me down as abstain, I would greatly appreciate it.
Chris?
9 in favor and 1 abstention.
Very good. Thank you so much.
Thank you for your support.
All right, now we're going to turn to New Mexico recommendations. So we're on agenda item 3, I believe it's J, @1 Ventures 2.
So this is a New Mexico program investment we're recommending, focused on early stage climate technology. If you recall, in November 2020, when the council adopted its strategic plan for investment in New Mexico renewable energy, the section related to New Mexico program mentioned we expect to allocate most of the program's capital to early stage technology investments, and that some of them inevitably could have a climate technology energy angle given all the technologies being developed at the national labs, and there's a number of there's all sorts of potential technologies coming out of the labs that relate to climate technology. We're recommending a $20 million commitment to @1 Ventures 2. @1 is a deep tech VC firm with a focus on technologies that can have a positive environmental impact. Climate technology companies, they seek to use disruptive deep tech to upend the unit economics of established industries, while also dramatically reducing their planetary footprint. And venture capital firms focus on this space. They're looking to back transformative businesses at the forefront of the fundamental transitions underway in energy, manufacturing, transportation, construction, and agriculture. It really goes across all industries, frankly.
at the end of the day, the climate crisis is a physical problem. Many companies in climate technology have a significant hardware component. Hardware solutions can be capital intensive, but they're also the only way to scale with meaningful impact. Therefore, when you're looking for investors in this space, they need to have the relevant technical expertise, and they also need to be really thoughtful on the funding plan for these types of businesses, given their capital intensity. The firm was set up by Tom Chi, who was actually an entrepreneur in residence at Crosslink, which is another firm of the New Mexico program. While he was there, he was focused on technical due diligence. Tom was a founding member of Google X, which was Google's division that invests in radical new technologies to solve some of the world's hardest problems. I'll pass it along to Richard, and then we'll pass it along to Tom. Unfortunately, Tom couldn't be here with us today. He had a board meeting he couldn't get out of, and we were looking to get him on the calendar earlier in the year, and we had to delay, so he will be on the screen.
Great. And At1 Ventures 2, this is a new relationship in the New Mexico program. And similar to the other funds that you've seen us bring for the New Mexico program, we view this fund as being complementary to the research being generated at various institutions in the state. And we hope that that will lead to New Mexico-based investments. At1 was founded in 2020. It's a relatively new firm by managing partner Tom Chi, but Mr. Chi has a lot of operations experience at a number of different firms. As Chris mentioned, he's co-founder of Google X and Mango Labs, and also a senior director at Yahoo. And then he also spent 4 years at Crosslink Capital, which is one of our New Mexico program relationships that's done well. At1 also has 8 investment professionals that are focused on this strategy. The fund strategy focuses on deep technology investments that have a net positive impact to the world. And then this may cover multiple industries, things like energy, agriculture, manufacturing, food, transportation, and construction. I think one important aspect of the firm that they look at in the due diligence process is they look at companies that can be cost competitive with existing alternatives as well. And then they also seek to help entrepreneurs post-investment and have a real value-add differentiator, and get very active working with entrepreneurs and building the companies. From a track record perspective, the firm has one fund which is tracking well on both an absolute return basis and on a relative return basis, but it is still early. There's been no realizations to date, but there are several companies performing well in the fund. And regarding terms, we view them generally consistent compared to other funds of similar size and age. And we're recommending an up to $20 million commitment to At1 Ventures 2, and I'll turn it over to Tom Chi, who's the managing partner at At1.
Mr. Chi, welcome.
Welcome. Thank you so much. So as mentioned in the introduction, I'm founder and managing partner of At1 Ventures. The purpose of our firm, kind of our tagline, is to help humanity become a net positive to nature. So that sounds great, but the way that we go and take something that's kind of positive sounding and make it into something very concrete that we can invest in is we take nature, we subdivide it into air, water, soil, biodiversity. Within those 4 categories, we stack rank the industries that are doing the most damage. So for example, 93% of global water pollution comes from just 4 industries: agriculture, textiles, paper and pulp, oil and gas. And if it means that if you could just change how those 4 industries, the unit economics of how those 4 industries relate to water, you could potentially deal with 93% of global water pollution. If you want to deal with the last 7%, it's 1,000 more industries. But just to give you a sense of the kinds of things that we invest in, we're always looking for something that we call the triad. The triad is a disruptive deep tech, which ushers in radically better unit economics paired with radically better environmental economics. So I mentioned that textiles are one of the largest water polluting industries on the planet. Textile dyeing in particular creates a lot of wastewater volume. And an investment that we did in that space that kind of illustrates the triad is the deep tech was a new type of textile dyeing machine, developed at an elite university that has 2.5 to 3x better OpEx. So the unit economics are not just a little bit better. And this is actually really key to our formula. Even though everything that we do is related to climate, environment, impact, then we don't go in there presuming anybody's going to pay any more. In fact, we go in there looking for the kind of deep tech that will dramatically improve the cost structure of that industry and have that industry run way more profitably and greener. So 2.5 to 3x better OpEx is dramatically better than how textile dyeing has been happening so far. And on the radically better environmental economics, then it completely eliminates wastewater from textile dyeing. Or to be really accurate, instead of generating many metric tons per day, generates about 2 ounces a week in terms of wastewater. So it's that I think is a good example of the triad, those 3 elements. And we basically look for that triad across all the industries that are doing the most damage to nature, which is why you'll hear about our investments in energy, transportation, materials manufacturing, built environment, agriculture, because the industries that create the most damage to nature are kind of all in those major categories. To give you a little bit more about myself and the team, so as mentioned in the intro, it's very helpful to have the right background to be able to work on these types of problems. So I'm formally trained in physics and electrical engineering with a specialization in robotics and signal processing. As a working physicist, as an astrophysicist for 6 years, and studied active galactic nuclei and star forming regions, worked in the same building as Carl Sagan, bunch of things. And then I went into the tech industry and shipped both hardware and software. So I worked at Microsoft, Yahoo, and Google, worked on multiple multi-billion-dollar businesses, and did so all the way through the levels of management, including executive management, ultimately running like a 80-person team at Yahoo that was running the product experience, user experience, analytics, and financial analytics for a $6.5 billion company. And then that was followed by joining as an executive at Google to help start the Google X team. And the Google X team, for folks that are not familiar, is the part of Google that created the self-driving car, Google Glass, Project Loon, Google Brain, which is the new approach to artificial intelligence, which is powering all of the voice searches and image searches on Google today. The contact lens that continuously measure your glucose levels and run on microwatts worth of power, inductively charged. So long story short, like I have a long history in both understanding this type of tech, working on this type of tech, inventing this type of tech, running teams that invent this type of tech, and getting it to interesting scales of productization. And related to that, I'm a named inventor on 77 patents across electrical, mechanical, software, and design fields. So I'll pause for a second. Actually, I should toss in one other thing. The rest of the team is equally skilled, and it's very helpful to have somebody with this background if you're trying to hire other people with this background. So Lori Manood is another partner in the firm, and she's formally trained in biochemistry. So between the two of us, we can cover physics, chemistry, biology, mechanical engineering, electrical engineering, which is most of the stuff that you can build. And then Helen, the third partner, she's formally trained in finance, but she spent most of her career in manufacturing finance. So very skilled at what it takes to set up the supply chains, get things all the way through scaled manufacturing, finance plants, all that kind of thing. And, to go simplify the way that we approach things is we look for these radically better unit economics paired with radically better environmental economics. And a lot of the secret sauce in the early days is we're just very good at helping these companies go from pre-manufacturing to post-manufacturing. And once you do that and they're able to bring these better unit economics to market, then we are getting a bunch of those results really taking off in the market in terms of practical, booked revenue and realized revenue. So I'll pause for questions.
Great, Mr. Chi, we thank you for joining us. We look forward to meeting you in person, and I very much appreciate you referencing the IPCC report in your slide deck.
Yep.
Yeah, I vote for that. All right.
Madam Chair, I have a question.
Who is that? Treasurer Montoya.
It is. Hello, and hello, Mr. Chi. I guess my question would be to staff, why are we doing only $20 million commitment? Is that correct?
Yes, you're doing a $20 million commitment partially because Fund 1 was so successful that we massively oversubscribed Fund 2. So there's actually not enough room. we also already increased the cap once, but we don't want to increase the cap twice because it moves you into a regime where the portfolio theory is a little bit harder to manage for early stage.
Thank you very much.
Treasurer, in the context of, they're looking to raise $375 million, we sized commitments in the New Mexico program relative to a reasonable prospect for making an investment in New Mexico. So in this case, we sized it to, hopefully one or two investments in the fund as part of a larger portfolio.
Yes, and related to that point, I do have a bunch of experience with the national labs, both when I was helping to start Google X. Actually, explicitly part of our strategy was to go visit national labs and top research institutions around the world in order to build the relationships with the folks that are technically most advanced. And sometimes we would basically find the breakthrough and pair them up with an entrepreneur. Other times we would, find, great entrepreneurial skill inside of the national lab and research system. So that I've been building those sorts of relationships with those sorts of entities. Also have good relationships with the NSF SBIR program, ARPA-E, the Air Force SBIR, so on and so forth. Been building those relationships for over 10 years. And at Crosslink, we had a similar kind of program. So to me, there's a good amount of continuity here and a good amount of familiarity in terms of the kind of breakthrough research that happens in your state.
Madam Chair, Mr. Chi, where are you located at?
I'm based in San Francisco, which is, the same place I was located when I was employed by Google.
I looked up several of the items and I started looking at some of the books behind you and realized a lot of the jumps that you've made in your career are similar to some of the book readings that you have. It mentions that you are coming to New Mexico to potentially visit the labs at some point. And when you do, I would invite you, I would love to meet you. You just sound so brilliant and intriguing, and I'm very excited to vote for this one. Thank you.
Yeah, I look forward to it. I also really appreciate the NASA White Sands facility. I remember visiting it some time back to look at linear orbital accelerators. So pretty cool stuff.
Wonderful. Thank you.
Thank you, Madam Treasurer.
Chair, I have a motion. Based on the recommendations of the Council Investment Committee, Consultant Mercer, SIC staff, and general fiduciary oversight of RBK, I move that the State Investment Council approve a commitment of up to $20 million to @1 Ventures 2 LP, subject to and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
I second the motion.
All right, we've got a motion by Member Bingham and a second by Madam Treasurer. Any discussion on the motion before the council? Hearing none, let's take a roll call vote on this recommendation.
Commissioner Garcia Richard.
An exuberant yes.
Treasurer Montoya.
Yes.
Secretary Props.
Yes.
Mr. Tejas.
Yes.
Ms. Allen.
Yes.
Mr. Bingaman.
Yes.
Mr. Jennings.
Yes.
Mr. Lavender.
Yes.
Mr. Messina. Mr. Summer.
Yes.
Mr. Messina.
Up there. Yes, there you go. Mute.
It does look like he's frozen. Madam Chair, passes 9-0.
Great, and Mr. Chi, congratulations. We thank you for being on with us, and we look forward to meeting you in person.
Thank you so much. I look forward to it as well.
All right, we do have two more voting items. And so we're going to go now to agenda item 3K, which is an RFP selection for short duration high yield. And we'll turn it over to Mr. Lawson.
Thank you, Madam Chair. Get my notes here real quick. So we're on page 478 of the material that I believe. And with me on this presentation, I have RBK, Aaron Berman from RBK. I believe Aaron is joining us remotely. RVK supported staff on this recommendation, and then from Alliance Bernstein, I have Aaron Montano and Neil Smith. Welcome. So what I'd like to do is I'd like to provide a little background to this recommendation, to why the strategy is being introduced, and then Member Ulrich during the credit committee meeting brought up three, I believe, really good questions that frankly ought to be re-aired for the council as a whole. And so I'll talk about those three questions, and then we can turn it over to Alliance Bernstein. That's all right. So for background, in March of this year, as part of the fixed income structure study recommendations, the SIC approved staff to add a high liquidity, short duration, high yield strategy to complement the available short duration cash management options within the fixed income public market strategy allocation. A few months later, in June of this year, staff notified the council that it was issuing an RFP in late July. A committee of investment professionals from the State Investment Council and the investment consultant RVK evaluated submissions in response. We screened respondents using multiple criteria, but really I'd say that the key screens were experience and depth of the platform, several qualitative and quantitative screens, the team's experience that would be managing the strategy, their historical performance, and really importantly, their cognition of risk levels and what specifically we were looking for this strategy. Certainly the platform, as well as the overall organization's structure, the durability, the sustainability, their philosophy, their process, and then as I mentioned, really the fit for what we felt our customized strategy needed to be. There were 15 responses overall. There were 2 finalists, and after careful review and discussion, the committee selected Alliance Bernstein. Just a few key points on why we did that. We wanted a large manager with trading depth. Certainly, they manage almost $700 billion, I think, right now. But not only that, they exhibited of all the respondents, they exhibited really good depth, not only in their team as a whole, but also in their trading operations and their trading staffing. We wanted an organization that could trade large chunks when we needed to trade that. It wouldn't overwhelm them. And then finally, experience. AB's been managing fixed income since 1971. I think high yield since the mid '80s. And the team averages 22 years of experience. As an aside, it was not an input into the selection process, but Alliance Bernstein has managed two public equity strategies for the SIC, I believe one since 1998. So they are familiar with the SIC. So quickly, before I turn it over to Aaron and RVK, Member Ulrich asked sizably 3 really good questions that I just want the council to be aware of. First off, I can broadly quote his first comment was, high yield falls to 0 in a stressed environment. Why is this in a liquidity portfolio? A few things. So I underwrote investment grade and high yield debt for over a decade, very early in my career, and I can tell you more often than once there was a high yield credit that I would have been much more comfortable with than an investment grade credit. So manager exhibited discernment and discretion in underwriting is really important, and we wanted a manager that understood when they gave their initial answers to the RFP, when they gave their follow-on answers, we wanted a manager that, through their answers, exhibited that they were cognizant of the liquidity needs and the low volatility, the low relative risk that this strategy needed, even though it was in short duration high yield. Vince can tell you that when it comes to public credit, the public credit markets, I have a bias towards short duration anyway. But with that said, within the liquidity tiering, this option would be third in the tiering, meaning that in a stress market environment, because of SIC's liability streams, we're not going to need any immediate liquidity to begin with. But given the excess liquidity that we're going to be sitting on, this would be third in that tiering. So this is a strategy that, yes, it is high yield, and yes, it's low volatility high yield, but it is one that we can tolerate some volatility in. And just as an aside, if I could point the members to page 18 of today's presentation materials, if you look at the one short duration high yield strategy that we do have in the public allocation, and it's a higher octane strategy. It is our best performing strategy in every single historical period. And had we been in that strategy earlier, it would be our best performing public market strategy, even in the 7 and 10 year bucket. So short duration in the public markets has fairly persistently exhibited a high Sharpe ratio, meaning the highest amount of return for the risk, for the risk unit that you're taking. Secondly, on the member Ulrich pointed out AllianceBernstein's performance in 2022, so I'm going to ask you to address that. And then his final question was, what's going on in fixed income? The answer is a lot. There are some serious regime changes going on. Really in public markets, there's a differentiation right now between what's going on in rates and credit. The economic environment the economic data has been relatively benign. So interest rates are saying, okay, rates are going to be higher for longer. But credit spreads are saying, okay, economic data is relatively good. So credit spreads don't have to be that wide right now. So there's kind of two different things going on right there. So as we go forward and as we likely transition to a higher rate environment, it's going to be less sort of herd mentality. We can't necessarily point to any one industry and say that industry is going to underperform or that industry is going to outperform, but it's going to be individual companies within those that have poor balance sheets that can't adapt to a higher rate environment. And so idiosyncratic risk and that ability to discern among individual credits is going to be more important than ever for who we choose. And so I think that underlines, really why we really, frankly, like AllianceBernstein's answers in the fact that they were very cognizant up front that it needed to be a low volatility strategy, even though it was still high yield. So that was a long speech. With that, I'm going to turn it over to you, Aaron, to just talk a little about AllianceBernstein.
Tom, are you talking about me or Aaron at AllianceBernstein?
Aaron Berner, yes.
Okay. Thank you. Just want to make sure. Thank you, Tom. And please let me know if you have any trouble hearing me. For the mandate, we really try to focus on strategies that exhibited higher liquidity, lower duration, and of course, the avoidance of excess risk. And after going through this process, it became very clear that AllianceBernstein's low volatility product really aligned well with the objectives of this mandate. One area that particularly stood out with AllianceBernstein's product is their technology platform, which the firm has been developing over the years. They've introduced a number of systems that help them underwrite risk. It helps them to optimize allocations. and ensure proper diversification, downside risk protection, and adequate liquidity. I'll let Will and Aaron walk you through some of those in more detail if that's of interest, but this is really a key differentiator from a lot of the other managers that we consider, as it makes the strategy a little bit unique, as it combines the best of your systematic processes with the expertise and the experience of portfolio managers. That human element is especially important because historical data does not always correctly interpret market signals. And so this allows them to utilize the efficiencies of technology and have that data at your fingertips, but also allows the portfolio managers to use their skill and to help balance the limitations of those systems. This is not a fully quantitative strategy. There are dedicated portfolio managers, and they maintain a relatively traditional role in asset management. There's also a team of 29 research analysts, 13 of which focus strictly on leveraged finance. And then they have a dedicated trading team as well that knows the leveraged finance market very well. They understand the limitations of the liquidity at times and can communicate with the rest of the team to ensure that the portfolio always maintains that ample liquidity. Tom mentioned, the strategies. So as far as the strategy, the objectives go, the objectives are to deliver 3/4 of the market upside, half the downside, and 2/3 of the volatility. I'm just going to point out real quick, those objectives are in relation to the broader high yield market. And so if you have the profile that we put together in front of you, that's being shown against the 0 to 2 year duration BB/B, which was the preferred benchmark for the SIC when we put this RFP together. And so that may or may not change, but importantly, the product returns that you're seeing on that memo are for the composite, and that's benchmarked to a broader high yield index. And so the objectives I referenced won't apply to the index that we're showing. I just wanted to clarify that. So sorry for any confusion on it. As a summary, we felt that AllianceBernstein's strategy was most appropriate for a number of important reasons. First being the higher quality nature of the strategy. This is going to be a strategy that focuses on BB and single B issuance, and it's going to limit the allocations to triple C, and it may even invest in some investment grade issues depending on market conditions. We also liked their unique approach that I mentioned earlier, combining the best in class technology along with a very well resourced portfolio management team to best capture and interpret the market data. Their focus on liquidity was very important. They utilize a trading team that works collaboratively with the portfolio management team, and it adds value through their experience as well as offering important perspectives on how the market is currently trading. They also maintain a well-diversified portfolio. It's going to consist of between 400 and 600 issues, which was on the higher side compared to the other managers that we considered. AllianceBernstein also has full capabilities across their fixed income platform, including both investment grade credit and securitized assets, which allows for the potential to allocate to other areas of credit if and when it makes sense in any particular given market, so long, of course, that those allocations are allowed. And then finally, AllianceBernstein proposed a fee that we felt was very competitive for the market. And so for these reasons, we are recommending AllianceBernstein for this new short duration high yield mandate. I'll turn it back to you, Tom, or Will and Aaron for their remarks.
Thank you, Aaron. Turn it over to you.
First off, I want to say thank you on behalf of AllianceBernstein for the long-standing relationship. My name is Aaron Montano, and I'm part of our global client group and have been with the firm for 18 years. Proud to be joined by Will Smith, who would be the portfolio manager for this specific mandate, and we appreciate the opportunity to speak with you today. I'm going to hand it over to Will to talk a little bit about our fixed income platform, our team, but more importantly, answer these 3 questions and discuss those and our approach to high yield.
Madam Chair, Council, thank you very much for having us here today. My name is Will Smith. I'm the Director of U.S. High Yield at AllianceBernstein. Our team oversees about $32 billion of high yield assets across a variety of strategies. And what we're talking about here is one of those strategies that focuses on downside risk management and lower volatility in our low volatility high yield strategy. A lot of it's been covered already about our approach and our philosophy, but I think that the focus liquidity management really can't be overstated, especially given the mandate that we're looking at here, where there's potentially a lot of capital that needs to get put to work quickly, and then potentially that capital could be used and drawn and put into the private market. So having the technology infrastructure and the market knowledge to be able to execute that quickly and efficiently, and in a way that generates really good returns for our clients longer term, I think is really critical. Just moving to the three broad questions, I think firstly, what happens to high yield in a crisis? And firstly, it certainly doesn't trade particularly well. I mean, we think about high yield as an asset class that's really in between government bonds and equities, and it behaves kind of in between those two. So if equities sell off, high yield tends to sell off, and default tends to move up as you need economic growth for high yield as an asset class to do well. But that volatility is much, much lower than equities. You're higher up in the capital structure. So things need to get really bad for high yield investors to start to take losses. And this is, the common way that we talk about this is through default rate. What percentage of the high yield market is defaulting currently? What percentage defaults when you hit a crisis period? And historically, the default rate is about 2 to 3% broadly for high yield. For this strategy, which is a higher quality, shorter duration mandate, the average is actually pretty close to zero. In our strategy, the average is zero. But in times of crisis, the default rate for the market generally goes somewhere between 6 and 9%, depending on the recession. And in this type of strategy, you generally see a default rate of something like 2 to 3%. Now, the way we set up our platform is to really try to eliminate any want to underwrite each individual position in a way that maximizes our protections for investors. And we approach that in different ways, not just with fundamental research, but also with quantitative strategies and, of course, liquidity management. One of the big advantages that we have versus private markets is that if a situation starts to deteriorate, we can look to exit. And so having that liquidity and that trading infrastructure is really critical for us to really reduce the downside risk, if you will. The other question around the performance in 2022, so the strategy that we run, as Roman spoke about, is a little bit more high octane than what we're discussing here for the state. So it has a longer duration profile by about 1 full year. So the biggest driver of the returns, so the negative returns, was just that rates moved incredibly high in 2022. So the strategy that we're talking about was down about 7%. But if you just took a year of duration out of the strategy, it would only be down about 3 to 4%, which is how we will manage this strategy. And if you compare that to the broad high yield market, the broad high yield market was down in excess of 11%. So it's really the step order of looking at equities, then high yield, then a low volatility high yield strategy, then even moving that into a more conservative bucket, running less duration or less sensitivity to treasuries, and focusing more on only lending to companies that are of the highest quality nature. And just maybe talking about the current environment, the best part about going through so much pain in 2022 is that the opportunity is so much better now. And if you look at the yields that you can achieve today in this type of strategy, they're the best that we've seen in decades. You can earn 7 to 8% type yields in this strategy, and something that really takes very limited default risk and has very limited exposure to treasuries on a go-forward basis. So we're really excited about it. Are there any questions on the rest?
Let's just see if RBK had anything to add before we take questions. Questions from council? Madam Chair.
Hello. Madam Chair, quick question just on the process. I noticed there was 12 out of the 15 that qualified. I didn't see a score sheet in our packet. Is there usually one, and is there usually someone from the council that participates in these processes?
So the answer is we do have a score sheet. I'm happy to share that with you, Treasurer Montoya. We historically haven't made that public, but I'm happy to share that with you and any other council member. And then secondly, we have had council members
participate in RFPs in the past. It's to my limited experience, it's been voluntary. This past time, we had no, when we notified the council of the RFP, we did not have any council members that asked to participate.
Okay, and Madam Chair, Mr. Lofton, what's the number of years for this contract? I couldn't find it in either doc.
So it's essentially ongoing with 30 days cancellation.
Until every 30 days?
It's every 30 days. So it's going to be a perpetual. It's like our other public market strategies. They're in place until they're canceled with 30 days notice. Okay,
and then on the fee structure, I was calculating it. So let's say 250 million. That would be 625,000. Yep.
Pretty much all it is. So that is non-public.
Oh, it's on the memorandum.
It's on, but that's a non-public memorandum.
Okay, I apologize. I didn't say anything that it was confidential. So let me just ask this question then. Is the rates that were discussed, is the fee structure that was discussed standard for in comparison to previous?
The fee rates, without giving away too much, the fee rates that AllianceBernstein proposed were exceptionally competitive. And I'm happy to share the other fee rates that were proposed with you for among the 15 respondents. And yeah, these were very competitive.
Okay, and then I had one other question, and this is probably for them. Looking at page 483 or page 3 of the packet, the AB leveraged finance team, that's the executive team that would be assisting, correct?
All those individuals are part of the investment team in some capacity. So that includes traders, researchers, and portfolio managers. There's 2 direct portfolio managers who are responsible for every position that goes in and out of the portfolio. That's myself and Bob Short.
Okay. I just wanted to know, in particular, New Mexico being a majority minority group, you had 90% men and 10% diversity. And that was me guessing, maybe it's, 5% diversity within the top leadership. And that's something that does concern me or makes me ask for you guys to start evaluating other people that have the skill set that can be part of your executive to increase that diversity. Nothing further, Madam Chair.
Thank you, Madam Treasurer. Further questions from council?
Madam Chair, based on the recommendation of the Council Investment Committee and SIC staff, I move, that the State Investment Council approve the selection of AllianceBernstein LP to manage a high liquidity, short duration, high yield strategy, as memorialized and discussed at today's council meeting, subject to and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Second. Okay, we've got a motion by Member Lavender, second by Member Bingaman. Any discussion on the motion? No discussion. If we can take a roll call vote on the motion.
Commissioner Garcia Richards. Commissioner Garcia Richards.
Well, it sounded
I'm sorry. Treasurer Montoya.
Yes.
Mr. Frost.
Yes.
Mr. Tejas.
Yes.
Ms. Allen.
Yes.
Mr. Bingaman.
Yes.
Mr. Jennings.
Yes.
Mr. Lavender.
Yes.
Mr. Messina.
Yes.
Mr. Summers.
Yes.
Motion passes 10-0.
Thank you.
Thank you very much.
Yeah.
So with that, you're going to ask the folks from RDK to step out while we consider their contract renewal. And I will turn it over to Mr. Smith for agenda item 3L.
Thank you very much, Madam Chair. In your book, on page 487, begins a 3-page memo regarding this recommendation. We are recommending that we re-up with RDK for another 4 years. I think all the technical stuff that you need to make decisions in that memo. So if I can, let me spend 3 or 4 minutes here just giving you some context, maybe because RBK's been a consultant for us for quite a long period of time. Over the course of my career, I've been really fortunate to work with most of the major investment consultants in the country. So RBK, of course, Cowen, NEPC, Makita, PCA, worked with all those firms. Worked with a very senior consultant at Cowen, and with NEPC, the same thing, a very senior consultant in their firm. With PCA, the founder of the company who covered our account. So I've been exposed to some of the top consultants at some of the top consulting firms, and I do not have better things to say about them than I do RBK. So the history of RBK is we hired them in 2011. I was really pleased when they offered Marcia Beard as lead. She's one of the most senior consultants there at RBK, and had a very good reputation preceding her. So we were very happy when she was offered on the account. We were facing a very big job at the time back there in 2011. We were about to outsource the entire fixed income portfolio. It was being managed in-house by a small team. It was really just being indexed to the Barclays or Bloomberg, I guess now Bloomberg Ag. And that was back in 2011 when credit spreads were still this wide. We just weren't exposed. So Al was going to go the entire fixed income program to boost up our returns there. We were looking at we're planning to put out the internally managed equity portfolio, which was about 60% of the publicly traded equity assets, and almost completely turn over the external managers in the publicly traded space. This would be what RBK would mostly be helping us with at the beginning there in 2011. Then there was also the very big job. The council was brand new. It had just been restructured, and mostly new folks on them. The entire top of the office was new. Steve and myself and Evan. Charlie was pulled into a new role. Brett was getting there as fast as he could a couple years later. So that trust building and that communication and things that had to happen back there in 2011, the selection of the investment consultant was really important at that juncture, and we were pleased when we hired RBK into that. 2014, they came up to a re-up time with them. We had just done a 3-year contract with RBK, and in an utterly shameless bluff, I told Marcia. Marcia was the main consultant on there, but she had Matthias Bauer as an analyst on the account. And RBK was recognizing Matthias's value and had just made him a consultant, and I was really afraid of losing Matthias off the account. So in that shameless bluff, I told Marcia I'd support a re-up if she would put Matthias on the account as a consultant for us. Of course, Marcia saw through my bluff, I'm sure, and confident she was going to get rehired after all the good work they've done in that previous 3 years. But the end result is we have 2 of the best consultants at RBK on our account today. So the last 10 years, 2014 to 2023, we've done a heck of a lot of stuff. Restructure the asset allocation. We've gone from a stocks and bonds portfolio to the current diversified portfolio that we have today. One of my favorite charts in RBK's materials is the one that shows our peer relative performance over 5-year periods where we were just worse or first, just this wild swings, and boom, all of a sudden it just had this nice steady performance in the second quartile. My first favorite chart is the one that adjusted for risk, which puts us consistently in the top 15% of funds nationally. RBK's had a lot to do with that performance improvement. We also were developing structures for the domestic equity, international equity, and the publicly traded fixed income portfolio. Those are very important for us to get the returns out of those markets, those structures. More important so than even the managers that we select, which RBK also has great input on. So they were great help there. They really helped us shore up our investment policy over that time frame. And really important to me is they help us staff projects that leverage the work for the strategy group. So a lot of the stuff that we do in terms of coming through our long-term capital market assumptions, to our basic strategies, our views of economy and markets out, 7 to 10 years. And consequently, our asset allocations, our RBK helps staff up the projects and the research that goes into all that. And in fact, we have 6 analysts on our account today. I don't know, I haven't asked RBK, but my impression is that's quite a high number for an account our size, relative to how they staff other accounts. And last, they really help when it's time, when I've got to make a decision, I can enter that with more confidence with their advice than if I did not have it. The last thing I'll say about RBK is that an old boss of mine told me one time, in fact, it's my first boss, told me, to the degree you can, try to do something fun the first thing on Monday morning. That'll set the tone for the week for me. So I've always followed that advice. Whenever I can do something that I find enjoyable, I try to do it on Monday morning. And on Monday mornings, I have a call with my strategy group and RBK. That's the first thing I do. So obviously, I'm going to recommend a re-up for RBK for another 4-year contract. And all the information besides that background history is in your memo, and I'll answer any questions that you have, Madam Chair.
Questions for Vince? Questions for Vince? And we're at the same rate, or what was the rate?
They've got it's an escrow there. It's a inflation adjusted rate. So we pay the trailing rate of inflation as a increase every year. It's been that way since we started with them. So effectively, they're working for us for the same price in real dollars as they were in 2011. Our portfolio is 3 times the size.
Oh, wow.
Madam Chair.
Matt, what was the number he said?
I think the actual number this year, I think is
that one I know.
It's in your memo.
Yes, but the one
yeah.
for this last year, how much was it?
Yeah.
Comparable.
It's comparable. We'll get you the number. It's same as what Tom was saying.
Madam Chair, I think I'm a little confused because I understand us not talking about fees in regards to like the asset allocate, the different things that we do within the portfolios. But all of these contracts and all of my boards, councils, and commissions, once we've finalized it to vote on it, we've been able to discuss it. And if we can't discuss it in our board meeting, then we go into executive session to discuss it. But I don't even have anything in the document to tell me what we were at before. So based on what we are at today in the memo, it says November. So I'm wondering why we do November instead of a fiscal year or a calendar year. And it says by the greater of 3% or the percentage change in the consumer price index. I know that that was a traditional way of doing things before, but what we learned on one of my other boards is that adding in a CPI, especially with the change in inflation in the market in the last couple of years, they ended up with an increase of $100,000 in their fee only off of the CPI, which they did not budget for and did not know to budget for. So I would ask if the CPI can be removed. What they did on that last one is instead of putting the CPI, they added in up to the 3% change. But even at that, with a 4-year contract, I mean, that's more than fair and reasonable, but adding a CPI is not something we should traditionally be using or doing. Having experienced some really budget problems with some of the other boards that didn't realize that the inflation or the consumer price index would be so high. So I guess I'll stop right there and see what the comment is.
Let's take, so there's kind of 2 different questions in her question. So let's take sort of your reasoning for the CPI adjustment.
So the CPI adjustment is, I would say, typical of these types of contracts with consultants like this. The main reason behind it is their costs are highly marked to CPI. So the major costs of these firms are obviously wages for their staff and their the consultants that they hire, their travel costs. All those things are highly CPI related. So when we do increase it by CPI, we're giving them fair compensation for their rising costs. So you'll see that in a lot of consultant contracts. I don't know what the type of contract that you all were working with, but in these it's pretty typical.
what about if there's a precipitous increase in CPI? What does that mean for our budget? And
Yeah, that's something that let me address that with RVK. That is something that we may want to talk to them about protecting. You know, when we do get a big jump like we had, you know, we've had to worry about that for more than a decade. Inflation's been very low.
What I would also, sorry.
Yeah, Madam Chair.
Madam Chair, what I would also recommend, especially if you don't want to talk about fees, and I understand that in all the other items, but on these 4-year contracts, we should absolutely be able to talk about it or have enough information to make respectful decisions. If we have the fees from the last contract that we did, if it, let's say, for example, was for 4 years, if we had the full amount at the beginning of the 4 years and there was a CPI added into it, we should see what that increase was, because we did that with one of our boards and literally it was over $100,000 and it was not budgeted for in this last 4 years that they had the CPI. We removed the CPI and I would respectfully disagree that a CPI is added in all of these contracts. That is not usually the norm. And I've talked to other state treasurers about making sure that we don't add that in as a norm. And on several of the other boards, councils, and commissions, I'm on the investment committees, and then I'm on the audit committees, and I've done the RFIs, and we've not added a CPI. We have, in one case, added the 3% increase on an annual basis, which I still didn't feel that comfortable with, but at least you can budget for it, knowing what it's going to be for the next year. So I don't know when this has to be reviewed or approved, or if we have time to get that information, but I don't feel comfortable in particular because one of the biggest issues that people complain about to me is our fees, and I don't quite know where we're at with them. As an elected official, that's one of the biggest issues that I had during the campaign trail. And even now that people ask me to make sure that we're not paying so much on fees, or that at least it's comparable. And then the last question was, why did we pick November? Is that just because that's when the contract begins?
That's just when this contract ends in November. So we're a couple of months here in advance.
Oh, perfect. So then that makes more sense to me. So then I would completely, I would ask you, Madam Chair and Mr. Vince, since we do have enough time, is it acceptable for us to get more information and you go back to the drawing board and ask them to remove the CPI and instead just keep the 3% if we can't take that 3% off either? Is that reasonable?
How about instead of removing the CPI altogether, we ensure that there's some kind of a app, or just, you know, that in this instance that she's referring to of just having it shoot up.
Well, that's what the 3% would do, is the 3% would still allow them to have an added additional increase every single year. And with the amount of money that they're managing for us, 3% off of 600 and whatever the amount is significant enough for inflation and travel without negatively impacting the council or your budget.
If I could, just one comment. I don't think I'm necessarily opposed to a flat 3%. I mean, that's pretty close to our long run assumptions for inflation. So essentially, we're going to get it just in a more smooth manner. So I'm not opposed to that. I would point out again, though, that the price we're paying really is the same inflation adjusted price that we were paying in 2011, and the changes in the amount of work that RVK is doing is a multiple of what they were back in 2011.
Just the volume of.
Yeah, we're over 3 times the size, and we're headed to be almost 10 times the size that we were in 2011.
So that's good to hear. So let's just hold on.
Can we go off of Vince's recommendation then?
So do you still have a request to postpone, or do you want to change?
I'm perfectly fine with Vince's recommendation if we want to keep the same price, and I'll just trust what you said on the comparable and wait for you guys to send it to us afterwards. And keeping the 3% on there, I would follow Vince's recommendation on that.
Well, I can't promise you 3%. I've got to talk to RVK about that.
All right, so then let's postpone.
Do you want to approve it, and then if they disagree, come back to us?
Yeah, I'm just saying I'm not opposed to the 3%, but I've got to negotiate that with RVK. They're just not going to do what I say. so I got to talk to him about it.
Madam Chair, Vince, would it be easier for you if we, the council, approved it with the 3%, and then if they disagree, then you can come back to us and we can redo it, because we still have till November 1st, so that if they agree with the 3%, we can move forward?
I think we're just going to hold off on our approval for at this time.
Okay.
And then we have, Mr. Schiff wanted to add.
Madam Chair, I would just add to the conversation here. Since I've been here, I think we've had the 3% every year, except for 1 year, and I think it was this last fiscal year, and it was a little over 7%.
I think that's
so the
exactly
3% pretty much has determined the price increase from year to year. I personally don't think they will have any problems with going with something comparable to the 3%, and that's my own input.
I agree. I mean, that's pretty close.
Okay, then you have to have that conversation. So let's just hold off on this vote until that. And then there was the other question about which fees are confidential and which are not, and how those get communicated to us. And I think even a request, when we have a contract renewal, that we have a history of what the cost of the contract has been previous. So
yes.
Can you talk about?
Sure. Yeah, we can add that information to our forward memos like this, and I'll visit with Evan about what we absolutely have to keep confidential and what we can't talk about in meetings.
I mean, for example, this is public because it's an RFP.
Yeah, it's public information on these ones. That's why I was a little confused and I opened my mouth. And it didn't say confidential on the paper, it was on the memo. So I just assumed based off of all the other boards, but if I can get some clarity on that too, and if it is going to be confidential, I mean, we want to be as transparent as possible when we can, but we don't want to negatively impact anyone either. So like when we're making decisions on the different assets, and I understand that has to be confidential, but when it comes to a 4-year contract, all of that's public record. So if you can find out, Vince, just to make sure I'm correct, but I feel pretty confident in that, just because we do that in all of our other boards too. And people can IPRA those and receive them. That's with para, ERB, retiree healthcare, New Mexico Employees Assistance. All of them have done that with those types of contracts. And then if we do want to still not say it publicly, then if we can just have last time's 4-year contract, and then if there was an increase, what that dollar amount increase was in percentage. And I think that will help us to make good choices and be more clear on what choice we're making.
Okay, so Madam Treasurer, Evan is going to respond as well.
A lot of folks are looking at me, so recognizing that I'm hearing this initially now, let me try and cover in sort of stream of consciousness thoughts regarding this. First, we're not obligated to do RFPs. We do RFPs primarily for a process. The procurement code exempts us for all investment managers, investment advisors, which is what RBK is, and investment-related managers. So to some degree, it provides comfort to our primarily elected officials to talk about RFPs because and that's fine, and we're comfortable with the structure. The second point is we like continuity, as Vince has talked about, with great managers and consultants and advisors. They're critical for what we do, and we are fiduciaries, all of us, for funds, it's 40-ish, approaching $47 billion, as we said today. As a fiduciary, we want to have structure and integrity with our folks. And to some extent, when staff looks at things, fiduciary duty means to ethically optimize returns on a risk-adjusted basis. That is, this fiduciary came up previously with some of the delegation / consent agenda stuff, but that's really what that means. And so we are empathetic and strive greatly to accommodate concerns of our political members who talk about, constituents and so forth. It's valid, and we want to work with everyone. It's not necessarily a concern as a fiduciary. It's not necessarily a concern
of us in terms of the fees. Now, let's talk about the public nature of fees. Not all contracts are public. It's sort of an open issue legally. Not all contracts are necessarily, quote, public. New Mexico may, and I don't want to opine on it because I'm not going to be definitive, but New Mexico has a trade secret exemption to what is public, potentially. Hasn't been litigated. And our duty or Vince's duty as a manager is to get the best rates he can, because if we blow them out publicly, we're unlikely to get as good a deal. And so a lot of what you heard from Tom today and Vince today is, we got a great relationship with these people. I'm comfortable with what these people say. These people get paid X hundred thousands of dollars on a $47 billion portfolio that's 3 times the size. I need to get these people lined up. I need to have them comfortable. And so I think RBK's position is, we want to give you the best deal we can, but we're going to get nailed by our other clients if we start talking about it. And now maybe that's their problem, and maybe they'll say no. I'm not sure we want to put them in a position where they say no based on whatever Vince just said, but as a fiduciary matter, we want to have the most responsible fees we can with the best possible managers, advisors we can, and I'm not sure it's a fiduciary concern to have a discussion of that level of fee. I do respect the pressures that public officials feel. I do respect that you have multiple responsibilities. So I guess what I would say is, it's not clear to me that this is something that would automatically be public. I think agencies may treat it as such, and I think, at the end of the day, if it was the will of the council, yeah, we'd blow it out too. It might hurt us a little bit, but I'm trying to be very diplomatic in how I address it.
So how about this? If this contract or this memo on the proposal was IFRS, what would you do in response?
We would probably produce it unless the manager took a position that it was a trade secret.
And these are not trade secrets.
Probably redact only that portion that they said was a trade secret.
I want to respond to that, because that is not a trade secret. When we're talking about the decisions we made on 100 million, 50 million, those fees, the confidential documents that state confidential, those can be considered trade secret exemptions. An RFP, a 4-year contract, a solid fee amount, those are not trade secrets. We've had those on public record. You can look at all of the other boards I'm on. They're all Zoomed. They all have the dollar amount that we ended up saying that we were going to have. They come in, they give a presentation, and we state why. To your point about relationships, I absolutely agree. Relationships are critical. When it comes to RBK or similar, like being able to say what the dollar amount, that's transparency and that's accountability. And that also shows that you are doing something that's equitable. Like, I buy a pair of boots. I want to go to other ones and see what those boots look like. But just because they're the same, they're boots, doesn't mean they're Cartwrights. And it doesn't mean that they're going to do good in the mud and in the snow. And so it doesn't mean that the relationship since 2011 has something to do with it as well. And so I don't think that RVK or anyone that's dealing with these types of contracts would have a disagreement, because that's not considered a trade secret exemption. And even if we wanted to go there, the council still needs to have the right information to be able to make decisions that they can feel comfortable with going back to the people that they serve. And there's one last thing I'd like to mention. I know that you don't have the same rules and regulations that everyone else does at the legislature. And I get that. And I know a lot of the boards don't have those same requirements. But I would also point out that the money that you invest is taxpayer dollars. And because they're taxpayer dollars, we still have the obligation as the elected officials to make sure that there's transparency within the decision-making that we're doing. And being on these councils, I'm not trying to be a rubber stamp. I'm trying to really understand what I'm doing, what I'm saying, and what I'm voting for. And that's where I'm coming from. Thank you.
I think that's well taken. And I think your request for further information will be respected. Let's go with Charlie, and then we'll go with Devin.
Madam Chair, just to clarify for the board, the memo from Vince was part of the public document. It is part of the public packet, and it does include what the proposed payment will be. It does not include the historical data.
I think there's been some confusion. I have not taken the position that this is a trade secret. I'm not telling you what you can and cannot say, but what you should or should not look at. The decision is simply what RVK might say as a relationship matter for Vince. It's unclear to me that they could, if it were litigated in court, that their fee would be a trade secret. So, I heard a little bit of it, but again, just as far as that goes.
And Madam Chair, one last question for Mr. Charles. The memo, him stating that it was public, that's wonderful, because that's what I saw here too. The memo from 4 years ago would have been public as well, which would tell us what the dollar amount is with the percentage. So for the council to be able to receive it or discuss it publicly is not going to be an issue in this particular subject matter.
Right.
Thank you.
That's right. Correct. So we are actually going to postpone this until Vince can have a discussion about his relationship, about our relationship with RVK.
Well, I'm going to propose a 3% increase instead of a 3% greater.
But that discussion needs to take place before the subject, okay? Okay. So we're going to move on. We're going to move on now.
I would just like to say, I think they've done a really good job. I mean, you all know a lot more about finances than I do, but those people have been very open and very good to work with.
I don't think there's that dispute here at all.
Well,
I think that we're changing terms is what's happening, and that discussion needs to happen first before we take a vote, because we don't know what the response is going to be.
Madam Chair, I move that we table this item till the next.
Thank you, Mr. Summers.
Second.
Okay, all right, and that's non-debatable, and is there objection to tabling this item? All right, so we're going to move on now to hear from Mr. Schiff. Agenda item 4A, CFO report.
Madam Chair, I'll be brief, and there's probably only one slide I need to touch upon. I just wanted to let everybody know that the auditors, Moss Adams, are in the process of completing procedures for the fourth quarter agreed upon procedures report. The deadline for that is the end of September, so you will be getting that report probably within the next week or so. Other than that, as I always do, I've included information on the budget. I'm not anticipating any budget problems through the end of fiscal year, with the caveat that we did put in a bar for the additional 6 positions that we're trying to fill because we didn't get funding in the legislature. The bar, you might be wondering why we just don't do a budget transfer, because overall I think we're going to be fine as far as the budget is concerned. We've received some guidance from some of our analysts saying a bar is a more appropriate route as it relates to permanent positions. So that's the reason that we're headed in that direction. And then finally, I think Steve touched upon, and I'll touch upon again, the total assets on the investment holdings report, $47.412 billion. That's a high water mark in terms of the investment holdings report, and it's very appropriate that this be Steve's last meeting, and I want to tell him how much I appreciate that. But other than that, I wanted to touch upon page 509, if I may, just a couple of things, because there was some input last meeting on this. Let me get this. If you look at the bottom of the schedule, within that $47.412 billion, you'll see these transfers that came in for August. $475 million to the Severance Tax Permanent Fund, $100 million to the Water Trust Fund, over $2 billion to the Early Childhood Education and Care Fund, and $50 million to the
Conservation Legacy Permanent Fund. In fact, the Conservation Legacy Permanent Fund, this is the first time that they actually appear on the investment holdings report. I just want to let everybody know that those transfers took place without any problems. You might be wondering about the opioid settlement restricted fund. I did have a meeting. Charlie was involved remotely with the Office of the Treasurer as well as the AG's office last Thursday. We were expecting in the neighborhood of $200 to $300 million inflow to that fund. I do believe after meeting with the AG's office, they're still trying to get their arms around that money. As the Treasurer alluded to earlier, I think, and this wasn't anticipated, I think some of the settlements are being paid out over up to 18 years. So we're trying to get some additional information. I'm hoping the Treasurer can help us kind of push the AG's office. They weren't maybe as prepared as we would have liked, but I think they now know the direction we're headed. And we let them know our job in putting those dollars to work is only as good as the information that they actually provide us. So we're hoping to get that taken care of within the next 90 days. So we'll have a good roadmap going forward. And then finally, I just wanted to point out that the fiscal year 23 audit is in progress. The work continues. Be aware that the audit is due the Wednesday before Thanksgiving, with the audit exit conference probably several days before that. If anybody's interested in participating in that exit conference, please let me know. And other than that, that's all the information that I have today, unless there's questions.
Questions for Mr. Schiff?
No, just one comment. I want to thank him. I want to thank him and Charles and their team and Mr. Moise and Vince for the teamwork and collaboration. Our offices are working a lot more, I think, now together than they had been in the past. And so I'm really grateful for that. My team's really grateful for that, and meeting everyone from SIC. And I think it's a wonderful way to collaborate efforts, making sure our transfers are going through really smoothly for all of our staff, and also working with the AG's office. I will definitely send out another letter because I know how important that is for you to have that information, especially with such an extensive amount of money. So I'll send that out this next week, and I will CC you guys.
Thank you.
Sweet. Very important work, sometimes overlooked. So I appreciate that. Any further questions for Mr. Schiff? All right, before we move on to agenda item 5, it's been reported that RBK actually is okay with the 3%. So if we want to just amend that really briefly, we could go back and take that item back off the table and vote on it.
Move, we take it off the table.
Okay, all right. Do we have to vote on that?
No.
Second.
Yes.
Yeah.
Okay, so we
I'll
have a
second
motion.
it.
Yes. We have a motion to take item 3L, RBK contract renewal, back off the table. We have a motion from Member Lavender, second from Member Jennings. Any discussion on the motion to remove that item from the table and vote on it next? All right, hearing none, we'll take a roll call vote.
Commissioner Garcia Richards. Treasurer Montoya.
Yes.
Secretary Barnes.
Yes.
Mr. Tejas.
Yes.
Ms. Allen is amended.
Yes.
Mr. Bingaman.
Yes.
Mr. Jennings.
Yes.
Mr. Lavender.
Yes.
Mr. Messina.
Yes.
Mr. Summer.
Yes.
Motion passes 10-0.
All right, with that being done, let's take a motion now for the contract.
Madam Chair, based upon the recommendations of the Council Investment Committee and SIC staff, I move that the State Investment Council approve the consulting contract renewal with RBK Inc. for a 4-year period as set forth in the meeting materials, subject to the change of limitation of the 3% limitation on the increase in the annual fee as discussed by the council today.
And removing the CPI.
Yes.
I'll second the motion.
All right, we've got a motion by Member Summer, second by Madam Treasurer. Any discussion on that motion? Hearing no discussion, let's take a roll call vote on the motion.
Commissioner Garcia Richards.
Yes.
Treasurer Montoya.
Secretary Props.
Yes.
Mr. Taya.
Yes.
Ms. Allen.
Yes.
Mr. Bingham.
Yes.
Mr. Jennings. Mr. Lavender.
Yep.
Mr. Messina.
Yes.
Mr. Summers.
Yes, and I would state that it's a bargain contract for the benefit of the state.
Treasurer Montoya.
Sorry, yes.
Madam Chair, the motion passes 10-0.
All right, great. Next, we'll move on to old or new business, agenda item 5A. And at this time, if we could have Ms. Charlotte Bennett join us at the Knights of the Round Table. We would like to convey our gratitude and well wishes to you as you continue on your journey, ma'am. So at this time, we'll open it up to council members who would like to congratulate Darla and thanks for, Member Bennett.
Well, thank you for your service to the state of New Mexico. It's fantastic. You know, we don't discuss public equities much at the table because we don't make a lot of commitments that require a vote, but it's absolutely bedrock to the portfolio, and you've done a fantastic job, managing that. Thank you so much.
Thank you.
Madam Chair, I had the pleasure of getting to work with Starla. I think I may have mentioned this once before, but we completely redid the large cap portfolio right shortly after I joined the council. And I can remember we had about 100. Is that about right? There was close to 100 applicants, and these books, there were 100 books about that thick of everyone applying to want to be the manager. And I worked with her and RVK, and we had, that was hours and hours and hours. But you know what? What a pleasure to work with Starla. I can only wish her the best in her future endeavors, and we're going to miss the heck out of you.
Yeah,
and
thank you.
you're a real treasure for the state.
Thank you.
In the early days, public equity did a complete transition of the portfolios, and I did have the pleasure of working with council members on a regular basis. Knew various members over the time period quite well, and so haven't had that opportunity, with, a lot of you, but, appreciate your role very much. Really thankful for the opportunity that I've been given to do this at the SIC. It truly has, been an honor, really, to serve, the council, and the state of New Mexico. Can't say enough. My husband's at San Diego National Laboratory, so we are fully into Mexico. I'm not going anywhere. And, I hope this is a see you later. Not a goodbye. So, I'm here. Thank you, Carla.
Thank you very much. Thank you very much.
All right. Does anyone have words for our departing state investment officer? Then first, okay. So, hearing no further comments on that, any further old or new business for the council? All right. Agenda item 5B, our next SIC meeting is going to be on Tuesday, October 24th in Santa Fe. And, yes.
Madam Chair and members of the council, I want to thank members for the earlier update on the search process. It sounds like it's going very well, and I appreciate you all taking on that responsibility, so I don't have to. And I sort of lost track a little bit. I was wondering, Madam Chair, if it would be appropriate to get a report from our consultant that we've hired in terms of as the application date closed, and if so, how many applications have we received? I'd like to get a list of who has applied for the position. So I just like to suggest that perhaps the consultant could send out an email to the council with some additional information on the selection process.
Madam Chair.
Member Allen, do you want to take that?
Madam Chair, I think I can take that. This is Kathy Allen. So we have been working closely with the consulting firm. We had 145 contacts. We had 51 applications, 11 of which were interesting, 6 of which are very interesting. Of those 6, 5 are from New Mexico. We are interviewing the committee, the governance committee are interviewing on October the 8th and 10th. Those 6 candidates by Zoom. Will come back with, we think, probably 2 to 3 candidates. And those are the candidates that you'll meet at the October 24th meeting. We are stopping taking applications on September the 29th. And the candidates that we have look very attractive. Again, the council will have a chance to meet them, and also the senior staff will have a meet and greet so that they can see who the candidates are. Right now, we're not disclosing the names of those for privacy reasons. Any questions?
Thank you, ma'am. And thank you for that update. I certainly don't need to see all 150 some, but I would like to see the 11 that has been whittled down to. I'd like to see those names, and I'd like to get a copy of their resume.
We're not sharing those names. Again, I think you can understand the privacy reasons. It's not a best practice nor a usual situation. You will get the candidates that after the governance committee interviews, you will get the 2 to 3 candidates and you'll get information on them.
I'm sorry, Madam Chair, but I'm a member of this council. This is the most important decision I'm going to make of my time on this council. I appreciate the work that the governance committee is doing. I'm not sure these names are not public. When you apply for a position with the state of New Mexico, it's public. So if somebody, and our general counsel can correct me if I'm wrong, but if somebody wanted to IPRA the names of everybody who's applied for this position, I believe we have to provide that information. So this isn't private. And again, I think as a member of the council, happy that the governance committee has done the majority of the work here, got it down to a reasonable number of applicants, but if that reasonable pool of applicants is 11, I'd like to know who they are, and I'd like to see their resume.
First of all, we're not going to interview 11 people. We're going to interview 6 people. There's
Right.
the one
Member Allen, we're discussing what is confidential and not confidential.
I suspect, I haven't researched this, I suspect that the DSA secretary is correct. I believe that applications would be, names of the candidates would be public.
Madam Chair, I believe he is correct. And as a member of the council, I agree with him. I would like to see those 11. And if you want us to keep them confidential and not share the names with them, as council members, we can absolutely do that, but we should at least know who those 11 are and do our own personal research, because it is government funds that are in there and quite a significant amount of them.
Again, we're not going to interview 11.
Hold on, Member Messina.
I think what we're talking about is 6 of the possible people that we will be interviewing. That would be the only ones I think to consider, because we're saying we're not considering the others.
So the request is for all 11.
Correct, Madam Chair.
Madam Chair.
Yes, Member Messina.
Yeah, I think there's a misunderstanding here, or maybe I have a misunderstanding, but I think this is the responsibility of the governance committee at this point. And I don't think the idea of turning over 11 resumes is appropriate at this point in time until we finish our work.
Member Messina, I don't think the request is around influencing. Well, I don't know. Maybe say more about your request.
Madam Chair, and probably the only council member who's had to hire a chief investment officer, and I've hired 2 of them for a multi-billion-dollar trust fund. I've been through this process before. I respect the work that the governance committee is doing in terms of vetting the initial pool of applicants. I wasn't interested in being a part of that. I have a day job, but we are very close to making a decision, it sounds like, on the state investment officer. Again, arguably one of the most important positions in all of state government. As a member of the council, I think it's appropriate to request a copy of those 11 individuals. I understand it's now been whittled down to 6, but if I see somebody on that list of 11 that I think should be on the list of now 7,
I think as a council member, I should have that opportunity. It isn't delegated to the governance committee. It's the council that makes the decision on the state investment officer. And so I'm not trying to throw a wrench in the works here. All I'm asking for is access to those 11 and their resumes so that I can review them. I also want to have access to the 6 finalists. And again, I think if any council member sees somebody on that list of 6 that the entire council should interview, it's similar to the consent agenda. If there's something on the consent agenda that I think should be taken off, it should be taken off. I think this is a collective decision. It's not just a decision of the governance. So,
Madam Chair.
Yeah.
I would just associate myself with the Secretary's comments. I think he's correct. I think in order for us to make an informed vote in the October meeting, it'll be helpful to assess the full field of the 11 candidates who were deemed interesting at the outset.
Madam Chair, I think there's a danger here. I think as soon as these resumes are circulated, that they then become subject to an IMPR request. And I think the confidentiality of this with respect to the applicants is a very important notion that's being ignored in my view.
So, Member Messina, I believe it was already stated by Mr. Lamb that they are public for purposes of different things. If you apply to a state agency, your application is public.
Having not researched it prior to this meeting, I am 95% certain that they are public, and that the second they come into the council or a committee of the council, regardless of where they reside, they would be public. I'm probably closer to 98% sure. Forgive me.
Well, if you do your research on the additional 2% and they are public, can we make them available to the 11 members of the council?
Madam Chair, I don't think there's any doubt that they're subject to an IPA request in my mind. But that being said, the request for the 11, I think we can easily get the 11 to you. Mr. Horpendahl can get an email to you with the documentation. It was his request, just so there's some understanding where this came from, that there were people on the list that didn't want their names known because it could jeopardize their current position. That being said, that they did make an application, so we will talk with Mr. Horpendahl and obtain the documentation that the Secretary is requesting.
Thank you. Thank you.
Madam Chair, I think that we, as a council, we can agree to keep them confidential within ourselves. I don't think we need to read it in the paper. I don't think we need to hear about it publicly. I think we can keep that among ourselves at this point. And I would not be comfortable if it came out where we didn't get a chance to see it. I realize that that's probably that may not square, but we ought to keep it confidential among ourselves.
Okay, very good.
I mean, if somebody chooses not to, then so be it. But
yes, Member Allen, for final comment.
Let me come back to you on how we might do that. I'm not comfortable sending things out in email because we all know things can be hacked very easily. Let me look at a procedure that would allow you to confidentially, my question, we have not, on the committee, we have not seen the resumes. We know the names of the 6, but we don't know the names of the 11, and we have not seen their resumes yet. Let me see how we can do it that would keep it as confidential and private and not have the risk of it being hacked or attached in some way. And we'll come back to you with whether it would be the 6 names or the 11 names that you're requesting and how we might do that.
Yeah, the 11 names are being requested, and,
Madam Chair, if we dropped them in a Dropbox and gave access to the committee, I think anybody who wanted to go on could look at them. That access would then be limited to
council members.
So I think that we could arrange a Dropbox that would allow
anybody. Dropbox, the 11 names and resumes with access to the Dropbox for 11 council members.
Correct.
And this, Madam Chair, this isn't going to resolve this issue today, but I would request Mr. Schiff look at providing the council with some kind of board platform. At ERA, they have board effect. I think they may have changed that since then. Board effect allows council members over for board members to go into a secure platform. There's an area where everybody can see stuff, but if you want something put aside.
Is this secure?
Board effector governed.
If they can put it in there, that's fine, but.
I don't know why they couldn't. I mean, Dropbox sort of format ought to be able to allow everybody who has any interest to look at it.
That's fine, that works.
Well, I actually think our board portal has a secure way to do it. But let me get back to you on that. But definitely they will not come out by email because that is not secure. And let our committee and the consultants talk about this, and we'll come back to you, Madam Chair, with how to do it.
May I ask one more question regarding that process?
Sure.
Is there a committee, or is it just the external folks that are doing a committee to determine who is going to be the top 3 or top 5 or top recommendation to us? How many are going to come to the council? And is there a score sheet that takes place so that it gives us guidance as to what was evaluated?
You know what, instead of answering that, I'm wondering, could we just request from our contractor that he put together sort of an email that talks about the process, scoring, all of those things?
Sure.
Okay. Let's just have Mr. Horpendal put together an email on what the process is.
Okay, well then, so then my next question to the governance chair would be, are we supposed, or the council, are we supposed to vote on this at our next meeting, or is it not till November? Because if we're going to wait for that process to be reviewed, there's less than 1 month, we're not going to be able to see it beforehand. And if any of the council members had a different idea of how that process should have taken place to make sure it was fair and equitable, or, you know, something wasn't added to the score sheet that they wanted, that they think is really important, or the score numbers were different from what they thought, that could potentially make us go another month back or forward.
So Madam Treasurer, it's my understanding that at the October meeting, we were to meet sort of the finalists.
The October meeting is to meet the 2 or 3 finalists. It's the governance committee, which is Mike Messina and Kurt and myself, will be the ones that will review the 6. The next step is by Zoom.
So the interviews take place on October 9th and 10th?
The Hootable.
Could we get an email from Mr. Horpendal for that, maybe?
Yes.
Okay, so let's just request that before the interviews take place, we get an email detailing what the process will be for scoring and that kind of thing. Is that?
I was trying to explain that what Hootable is putting together the matrix. The answer is yes, there are very specific questions that will be asked, and a matrix and how we score people.
You have a request, Madam Chair, you have a request from the treasurer to see that matrix before the interview takes place.
I'm sorry, it's hard to be on telephone and then we're crossing each other's voices. So I apologize for that. I'm trying to explain the process. So we will get, I think within this next week.
We're not gonna, remember, Alan, we're not gonna go through the process right now. We are an hour past time. We've got public members here wanting to testify. So instead of you going through the process, I apologize, but I'm going to cut you off. We're going to now we're going to make a request of our contractor to send an email to council members with outlining the process and the matrices. And we're going to move on from this topic. That's right, Alan.
I'm sorry, it's too important. Thank you, Madam Chair.
You're right.
All right, so we're now going to move to agenda item 6, which is public comment, and I believe we are welcoming members from Local 11 to share with us. If you guys could take a seat up there. And Charlie, can you go through kind of the system of how we take public comment?
So we do take public comment, and we limit your comments to 5 minutes each. Please try to be brief. We don't typically respond, but that is up to the council itself.
We don't typically respond in the meeting, but if you're wanting to stay around afterwards, I would be happy to have a conversation with you. Great. You could just move that name tag. Okay.
Great. I'm going to look at my notes.
Go ahead and introduce yourself as well.
My name is So my name is Beatriz Topete. I am the Arizona Organizing Director and Vice President of Unite Here Local 11, which is a union that represents over 32,000 hospitality workers in Southern California and Arizona. And the reason we're here today is because we want to talk to you about we're here today to address the board about the investment manager Blackstone Group. And that this group, the New Mexico SIC invested $100 million, probably know that too, to the Blackstone Real Estate Partners number 4, which is the owner of the Sheraton Phoenix Hotel, and Crystal here is a worker from that hotel, and she will also do comment. And in Blackstone, also $75 million in Blackstone Real Estate Partners number 8, and which is the owner of the Aloft and Fairfield LAX El Segundo, which Fernando here is a worker of and actually was in strike. The contracts at the Sheraton Phoenix and Fairfield LAX El Segundo and the Aloft LAX El Segundo expired on June 30th. And workers at the Fairfield and Aloft went on strike in July to fight for family-sustaining wages, affordable benefits, and safe and humane workload. The hospitality industry was hit really hard during the pandemic, and many of our members, at one point, 90% of our 32,000 members were laid off, and some stayed laid off for years, making it very difficult to continue sustaining their families. So the workers are fighting for a fair contract. We are fighting for affordable benefits, humane workload, and there's an escalating labor dispute in Phoenix, Arizona, which we will talk about a little bit more. The Fairfield and Aloft hotels, both owned by Blackstone, hired Black and African American strikebreakers. At least some strikebreakers were hired through the app called InStore. During that period, we observed that there are not that many Black workers working in the hotel industry. That has been a point of contention because we just don't see many Black workers hired, but they are hired as strikebreakers. So, and several of those workers actually decided not to go in because why should they be hired only as strikebreakers? They really need to have the same benefits that the rest of the workers have. And so the Aloft at Fairfield actually hired 3 times more Black workers than they normally have for temporary strike-breaking work. It is particularly concerning that Blackstone Group continues to confront labor concerns given that Blackstone-owned Packer Sanitation Services, Inc. paid $1.5 million in fines in February for employing more than 100 teenagers in the job as meatpacking plants in 8 states throughout Blackstone Fund, throughout a Blackstone Fund unaffiliated with New Mexico SIC. So this is a different fund. But it's still Blackstone, and the children reportedly worked overnight shifts and used hazardous chemicals to clean dangerous meat processing equipment like brisket sauce. So what we're doing here is that we're requesting that the New Mexico SIC add an information agenda item in the upcoming October meeting of the New Mexico investment in the Blackstone Managed Limited Partnership, and we ask that New Mexico SIC not reinvest in Blackstone until the contract disputes are resolved and Blackstone can guarantee labor peace at its hospitality investments. We're also providing copies of letters to all the members of the board that provide further details regarding those ESGs. We will email them to all the members of the board. And so I'd like to now ask Crystal to speak on the conditions of work where she works.
Good afternoon. My name is Crystal. I work at the Sheraton downtown Phoenix. I'm a cook there. I'm also a proud member of the Unite Here Local 11 union. I'm here because we're going through a labor dispute. Our contract has expired. I will tell you a little bit more about myself and what I deal with. I've lived close to work for 8 years because I rely on public transportation. It's not the best, but it's, it's somewhat reliable. Before the pandemic, I lived in an affordable studio, and I moved when my landlord raised the rent at the height of the pandemic. And then since the pandemic, the cost of living has spiked, rent has gone up. Landlords are basically requiring that you make 3 times the rent. And just with my income alone, I don't even apply to, I couldn't even apply to be on my own lease for a place I lived in for the past 3 years. And on top of that, therefore it's extremely difficult to rent anywhere else. And I'm overpaying for an apartment that was built in the early 1900s, not very well maintained, and has a very expensive monthly electricity bill. Since I've been in this industry, working at a unionized hotel has been compensated better for my position, and yet I'm still unable to afford health care. Even at the lowest paid positions, I still made too much to qualify for access because I could not afford to work full time.
Access is the public.
It's AZ Medicaid.
AZ Medicaid.
I haven't seen a doctor in 10 years, with the exception of a couple ER visits, which I'm currently in debt for and I'm still paying off. It's like I'm trapped in a loop. I make too little to afford basic necessities, but I make too much to get help or to be considered poor enough for assistance. I don't know if you guys know what that feels like, or if you guys could even imagine, but it sucks. Right outside the hotel is where we hold regular picket lines. We will continue to have actions and inform the guests and public about how we are being treated. We are all tired of being exploited and not making enough to do more than just barely survive. My coworkers and I have helped Blackstone reach a worth of $1 trillion, and it's been 3 months since our contract has expired. It's not right that they're refusing to negotiate with the Sheraton or other hotels in its portfolio. And we urge you to tell Blackstone to do what's right and to resolve the labor dispute, because we are ready to keep fighting and doing whatever it takes to win a fair contract.
Just, if I may, I could add that in Arizona, homelessness has increased in the past 2 years, 27%. The rent is one of the, especially in Phoenix, they're one of the highest rents. They have increased almost doubled for most people there, and making it really quite impossible. And there have been so many evictions from our members. So what we're asking is for livable wages that sustain families. So now I'm going to ask Fernando to say a few words. Thank you.
Thank you. First of all, thank you so much for your time. I know you have a really busy morning, and I have learned from you in 2 hours more than if I was for college for a year, which is good for me. My name is Fernando, as Beatriz introduced me already, and I've been working on the A-Love and Percial Hotels in El Segundo for over 3 years already there, in the housekeeping department. And as she mentioned, also I'm a part of the United Kid Local 11. I'm here today to urge you to tell your investment manager Blackstone to resolve the labor disputes that affect workers across California, Southern California actually, in Arizona. In July, the 4th weekend, over 40 hotels, we went on a strike. Dozens more have participated in picket line protest outside their workplaces. We're fighting for our future, for living wages, affordable health insurance, a pension to retire with dignity. My coworkers and I, we do back-breaking work every day, and we struggle through because I have a mortgage and 2 sons. The old one is going to graduate soon from UCLA, and Alejandro, the youngest, is going to Dominguez Hills because of the cancer. And I try to support them as much as possible. I mean, most of us, we have sons at school, and it's not easy, even if they're public schools, it's not enough to cover the housing and the stuff. Yeah, I mean, more for her is just ridiculous, how the government says, you can apply for the stamps or whatever they call it. My son, Fernando, went to apply for that, and even if he's a full-time student and he works at Target, a part-time, they offer him $30 a month. $30 a month. So it's something you cannot believe it after you've been working those many years and putting all your taxes every year. He just got $30, and other people that were not even, you know what I mean, not even went to college. I don't know how they find a way to always be paying for everything on the market. So that's why, even though I work right now, like I told you, for hotels, and sometimes I got another part-time in another hotels like I did last year. I work for the Hotel Perla, LA, in downtown Los Angeles. It's the only way I have to help both of them as much as possible. And besides, we are paying our mortgage, the one is really more than $2,000. If you put everything together, it's really hard for me to make it, and really I live pay by check every month, and just figure out how I'm going to do my bills next month. So that is why we are fighting, and it's why I will take whatever it takes for and however long it takes to win the fair contract. That's all we want. We only asking for a fair contract, for get money that one make us live with the dignity. You know what I mean? It's not we want more than that, and we'll be going fighting because I show my kids. I think it's a good example. When you have a son, you have to show them what you're looking for and what you want for the future. Because I always believe that for me as immigrant, I have to learn, as you can see, my heavy accent, and I want a better future for both of them. That's why I encourage to go to college. So last month we called it for a bikers in Los Angeles hotels, and it wasn't easy to come to that decision. But when we're asking for no more than what we deserve after decades, many workers are there for more than 40 years doing the same job. Housekeeping is one of the really hard jobs department because they have to take care of the rooms, everything. And after those decades, dedicating their lives, our lives to the industry, and after we are met with the incidents of violence and violences, and a couple of our picket lines, like happened close to San Diego, one of the guests was upset because they were making the picket line outside, and he literally hit one of the room attendants in the head. You have to go to the emergency room and stuff. We know the strike, boycotts, and labor disputes are not good for business. That's why we are here. We are here to talking to you. You are responsible for ensuring that your investments are wise and healthy ones for your beneficiaries. We are asking to you to tell Blackstone to resolve the labor disputes and settle the labor disputes. And until they do not reinvest with Blackstone. And again, thanks so much for your time.
We wanted to have you see the humans behind the investments that you do, because they're the ones that are affected. I don't know if it's possible, but what we flew in from Arizona, from Phoenix, and but Matt had to leave, so he has a statement. If we can read it, it'll be fast. If you're okay with it, so go ahead and just read it.
Good morning, or good afternoon. My name is Matt. I work at the Sheraton Phoenix in downtown, East Street Cook. I'm a proud member of Unite Here Local 11. I'm a proud trans man. Trans-affirming health care and birth control are expensive, so expensive that I was forced to sell my plasma to pay for my health care. Can't do that anymore, though, because I was diagnosed with high blood pressure. It is a constant struggle to afford my basic needs, keeping a roof over my head, paying for health care, putting food on the table. Rent in Phoenix is skyrocketing. My rent has gone up hundreds over the past few years and has forced me to move back in with my parents. It was a heart-wrenching decision to move away from my partner of 6 years, but we could no longer afford the rent for our apartment on the hotel's wages. My parents asked me about grandkids. My friend has kids. I want to have a family with my partner, but I can barely make it on my own at the hotel. It shouldn't be this difficult. This is why I'm fighting for living wages, affordable health care, and pensions so one day I can hope to retire. Blackstone is the largest investment company in the world with $1 trillion. Please imagine what it feels like to work at a hotel owned by a company with almost $1 trillion and not enough money to start a family. They can afford to pay us fairly. The question is, why are they choosing not to? For the past several months, even when the temperature was almost 100 degrees in the morning, my coworkers and I have held picket lines outside our hotel, informing guests and the public about the labor dispute. Labor disputes are not good for business. I am ready to fight for what we deserve, and I won't stop until we have won. Please tell Blackstone to resolve the labor dispute and settle a fair contract.
Thank you. Thank you for your time.
And thank you for coming all of this way, and please let Matt know we're sorry that we're not able to hear before he left. Thank you.
We appreciate it.
Madam Chair, may I ask a question to clarify something for myself? What the wage is that we're referencing in, from $1 amount to another amount, just a wage range that they're currently at? What the rent or mortgage is in their current area? I think I heard $2,000 for a mortgage. I didn't hear the rent. And then the dollar amount for the rent of a hotel room.
And I'm wondering if Jordan can get those to us.
Jordan can get those to you. Jordan is our senior researcher, but I could tell you that the rents are now running anywhere between, for a studio apartment, $1,500 to $2,000, and for a one bedroom, even above $7,000. You cannot find a one bedroom or two bedroom less than $2,000. It is really tremendous how much people's rents have doubled, and there are so many. And we have our members have been struggling. As a matter of fact, we did a survey, a poverty survey, and it's still in the stages of being completed with the Grand Canyon Institute plus another organization, and it showed that 60% of our members have some measure of food insecurity because rents have gone so high, so people will put all in their rent. And therefore, we, the union, are starting to do food banks because there are so many of our members that are really struggling. So our average wage is about $16 an hour. It's, up and down, but $16 an hour. And we're asking the company for a real wage increase that will make a huge difference in the workers' lives.
So, Madam Treasurer, if we could just make that request of the organization for further details, just in the interest of time.
Agreed. That's good.
Okay.
Thank you so much. Thank you very much.
All right. So I would actually like to request for the October agenda to have an informational item on this piece be added to the Blackstone investment recommendation. All right.
On one other subject, we're going to add something. This code of conduct that's coming up, I think a code of conduct is something that people should probably sign. But I would tell you, I don't think you can require that a member appointed by a legislative branch or the legislative branch can require the governor of her appointments to have them sign the code of conduct if it's not written in the statutes. And so I'm just saying, if you want to have them sign it voluntarily, I think they can do that. But I don't, when you look at a system of checks and balances, the governor appoints some that she can appoint, and if that requirement is not put in there by the governor that they have to do that, I don't know that other people can require them to do it. Just like I don't think that the governor can require if it's not in the statutes, they sign that document. I don't think that the governor can require them, the House of Representatives to appoint somebody who meets that standard. And I so the code of conduct, I think, is something good to have, but I don't think it's required. You can require that of the legislature, or the legislature can't do that.
So, Member Jennings, we're actually going to have further discussion on the code of conduct.
I'm just
include any reference to.
So they're ready next week.
The
That's all I'm
appointments
saying.
if there is a statute on the appointment and it references the code of conduct or does not reference the code of conduct, could you please add that to this discussion?
I can already answer the discussion. Staff is not requiring anything of the council.
Is there a statute that requires code of conduct?
There is not a statute that requires a code of conduct for the council. The council members among themselves decided to institute whatever was instituted as what they consider governance. This is not statute.
I take it. All right. Thank you. All right. With that, we are ready for the adjournment motion.
So moved.
All right, we have a motion and a second. Is there any objection to adjournment? Yes.
Comments around Mr. Moise?
Oh, my goodness gracious.
I was going to say.
1:30, I've been sitting in the chair.
He thought he was gonna get away. John picked it right out of the sky.
Sure. Steve, I think what you and the team you've assembled have accomplished over the last, I guess, 12, 13 years has been, I think, one of the most important and arguably least understood and underappreciated, but most important things that's happened in all of New Mexico state government that I'm aware of, which is that, you know, you took an office managing whatever it was, 14 billion, however it was managing it, not, but today, you know, we, as a state, right, we have so many challenges, we have so many things to be proud of and celebrate, and I think one of the things we can most celebrate is that the people of this state have a world-class sovereign wealth fund managed at the highest level of professionalism and integrity, and I think we have you to thank for that and your team. So thank you so much for what you've done for our state.
You're here.
You know, Steve, I have to second that. You've done a great job, and you and your team putting the confidence of the people back in this agency. And it's, you know, you've done a good job, and I appreciate that. Thank you. But people should too. So, thank you.
I particularly like the fact that the relationship you and I developed from the beginning. When I was appointed, sure that this is exactly what I could do. I met with Steve and I met with Evan and Vince, and I was convinced that this is something that I could really like to do. I think that Steve has been phenomenal, and I think that echoed both John and Tim that the integrity in this job, your job, the key, in my opinion, is integrity. And the fact that there may not have been that level of integrity before, and I'm not trying to go there. I'm simply saying that when you came on board, that was established, you brought Vince, and then my other piece is, thank you for bringing Vince into our picture, because as far as I'm concerned, of all your accomplishments as the SIC State Investment Officer, bringing Vince Smith on board was your top thing. So I can just say thanks for everything you've done.
Thank you.
May I make a comment?
Yes, we're going to have all the ones in person do it first, and then I'll go to online, Madam Treasurer. We'll go to you first after Member Summer.
Steve, I'm just sad that I'm not going to get to work with you. That I'm the latest man to the table, and I think the integrity that you restored to the office and the team you've assembled is phenomenal, and you're to be highly commended. And the state of New Mexico owes you a great deal of gratitude and thanks for all your hard work and your selflessness in putting yourself in this position. So I echo what John said, and thank you for everything.
Great. All right, Madam Treasurer.
I was going to be so sad that we weren't going to say anything, and I thought I missed it. I really wanted to thank you for the time that you took to come to my office and meet me face to face. It was a very short amount of time, but it left a really big impression in my heart. The team that you developed and how you have grown SIC is remarkable, and I think a lot of people forget why you came into the position when you did, and how the New Mexico history really was impacted during the time that you came in. And to be able to have the results of growth are a direct reflection of your leadership. And a lot of times, we want to be good managers and we want to be good leaders, and sometimes we're better at one than the other. But you can tell by the numbers within the SIC and the team that works together that you're able to do both. And so I wish I could have had a little bit more time to be mentored by your guidance, but I really appreciate what you've done to serve New Mexico and to help our portfolio grow and to help many of the people you've touched. So thank you very much. And I really hope that you have a beautiful retirement and they don't bug you too much.
Thank you, Laura.
Member Ted.
Well, this all came about way too quick there, Steve, and I wish you well in your future endeavors. I have to say that your tenure at the SIC will be a lasting tenure. It will be the generations in the future will benefit from all the efforts that you and your team have accomplished over your steering the ship here. And somebody really does owe you an honorary doctorate. I know you're an attorney or have your JD, but somebody owes you an honorary doctorate because of all the funding that you've provided to the higher education institutions in New Mexico. I think we forget that the earnings on all of the investment activities go to fund education in New Mexico. And so much of it goes to UNM and NMSU and all the constitutional schools. And for that, we are all better off in New Mexico. One of the things that really should be highlighted here is we hear so many things about New Mexico and issues that we have, but the State Investment Council is really a shining star in the country and in the world with our sovereign wealth activities. So it is remarkable what you've done, and your team is just highly commended, and we all have the most respect for you. Thank you.
Thank you, Nick.
Member Allen.
Yes, we're going to have another chance to celebrate you. We're trying to put together a dinner at my house on October the 30th. So all of you put that on your calendar with your spouses or partners for the council members and the senior management team. And not only can we say good things about him, but I think we could have a few roasts about Steve also, which would be fun. Anyway, Steve, I've known you from the first time I was on the council, and this time you brought great integrity, great intellect, and a great team. Thank you so much for everything that you've done and what we've all learned from you.
Thank you, Kevin.
Yep.
Wayne. Madam Chair, I have a bit of a unique perspective on Steve's time. I started as the Executive Director of the Retired Healthcare Authority a few months before he became the State Investment Officer. If there was an organization or a state agency more dysfunctional than the Retired Healthcare Authority at the time, it was the SIC. And, we talk about the investments and the growth in the fund, but I had maybe not a front row seat, but I was a couple rows back and seeing not only you bringing in Vince, Evan, how he guided this council through the enormous legal issues that you faced when you inherited this job. It's just, I still marvel at it. I mean, I remember thinking at the time, they're never going to get all this resolved. Not only did you resolve all the legal issues, you brought a lot of money back that we should have never lost in the first place. Talk about your integrity. It's not in question. That's why they hired you for this job. But as someone who had that early front row seat to the beginning of your time as a state investment officer, enough can't be said about what you've done for the state, for the council. I'm really happy to finish my association with you, at least professional association with you as a member of this council. It's an honor to do that, and I can't say enough about all that you've done, and thank you.
Thank you.
Good things lie ahead for the council. Thanks, everybody.
Thank you.
Is there objection to adjournment?
No, ma'am.
Hearing none, we are adjourned.